All right, good evening, everyone. Welcome to another space, of course, with me, Kalu Aja. And of course, on our space, as usual, we're talking money, the economy, and finance. This week, of course, we're talking, personal finance as usual. And our topic is building an investment portfolio. I want to use as a bridge to talk around building up an asset management portfolio. Should you use individual purchases, i.e., individual stocks, or do you want to buy the index? And the lessons here are going to be the same if you were buying, say, in Nigeria, or if you were buying in Canada, or if you were buying anywhere really. The question is, do you want to buy individual stocks? Do you want to buy the portfolio? And what should be the trigger? How do you determine which is right? Because like I always tell you guys, in investment, there's no right or wrong answer. It's really a question of what you want to do, right? Stocks are not better than bonds, and bonds are not better than, say, even Bitcoin. It's what do you want to achieve? Then you basically build a portfolio that achieves that objective. So that's what I want to talk about. How do you surmise and say, oh, this is better than that, or this is not better? What do you do? That's what we're going to talk about this evening. As usual, guys, we're going to have tons of questions. If you want to ask a question, just request to speak on the mic, or request to speak on Twitter, and I'll add you. But I have a presentation here I want to just show you guys. Very, very visual. The team has worked to just get me this out. It's very, very good, so thanks. It's very, very nice. You can follow, and it's very visual, so it stays. And again, we record this. We're on YouTube. I think I should link on YouTube. We're on YouTube. We are also on Twitter, so you can go back and watch it. And so the visuals help, because even if you're in a place where you can't listen to the audio, you can just look at the slides and you can see what we're talking about, right? So that said, let's just go ahead. I'm going to share again my slides for the folks on Twitter under the tweet feed. I think it's fantastic if you would follow. The visuals do give you a better understanding. So I'm just going to go to that tweet that I did, and we can start. So we are talking about building an investment portfolio. And also, just a heads up, someone wrote to me, someone has been following our space for a while, and he said, listen, Kalu, I'm just reading this tweet now. Kalu, I log into your space every Sunday just because I want to know what's happening in Nigeria. So even though I like your topics, but this is the only place I go to just to get an idea of what's going on in Nigeria. Could you also include in the spaces, even if it's for 5 minutes, what's happening, for instance, in Nigeria in terms of the economy? Just a slide or two, just to say, oh, this is the inflation rate, or that's the GDP rate, just so that we follow and all that. I said, yeah, so that's a good idea. So let's do that. So what I'm going to do is that every week when I talk, regardless of the topic that we're speaking about, I will try to include just a summary of the Nigerian economy, where we are in some of the economies, so just so you can have an idea. So let's kick off with that then. Keeping that in mind, we're going to start off with a disclaimer, right? So because we're talking about stocks, we're talking about investment, it's very, very important that I disclaim clearly to you that all we're doing here is educational and informational. It's not an investment show, right? We're not asking you to go buy or sell. Nothing we're discussing here should be taken as financial advice or recommendation or solicitation. Do your own research, talk to your advisor before you buy. Stocks are very, very risky, and past performance is not a guarantee of future performance, right? So let's get right into it. Let's talk around the Nigeria, what's happening in Nigeria right now. If you look at the slide I'm sharing on YouTube, also going to share it on Twitter, the Nigerian inflation rate is down. It's about 15.06. So that's down from January. So the story is that Nigeria is experiencing slower rise in price. It doesn't mean prices of goods have gone down, but the rate at which those goods go up has reduced. We're now about 15.05. GDP growth is still stable at about 4.3, 4.5. That looks like a lot, but not really, because our population is going about 2.93. So we're really growing real at about maybe 1.1 or even say 2%. So we need to grow faster than this. Like I gave a start last week. The highest growth that we have experienced from 2023 to date is not up to the lowest growth we've experienced from 2000 all the way to 2023, right? So we've got to do better because we can't be growing slower now than we were growing in the year 2000. So we've got to do a lot better than that, right? All right, fantastic. Oil output, that's a key indices for you if you're Nigerian. Oil output. Oil output is about 1.46 million barrels. We should be doing tons more, especially because of what's going on in Iran. If we can sell more oil, we get more money. It's just that simple. If we don't get more money, we borrow. The more we borrow in dollars, the more the naira goes down. Simple equation. MPR is connected to your inflation rate. As you can see, your inflation rate is 15. Your MPR means how much the banks, I'm using cultural language, what the banks go to borrow money from the Central Bank of Nigeria. What that means is that no bank will lend you below 26.5. That's what MPR means in real terms, right? If your bank is borrowing from the CBN at 26, it's not going to lend to you at 25. So that means all SMEs are going to borrow money from the banks at 26%, which is not good. Your exchange rate, again, 1.3. It's down. It used to be about 1.4, 1.5. So Naira has strengthened a bit. And look at the trade exports there. We have to have a positive trade number. It's positive now 1.2 billion, which means we're exporting more than we're importing, which is very, very good. But again, what are we exporting? Crude oil. We are still a mono exporter. We do cocoa, but it's nothing. The bulk of our foreign currency comes from crude oil, about 88%. That's a big vulnerability for Nigeria. So that's the economy for you. And also for this slide, I'm also going to include this slide again weekly. This slide is going to show us what we are doing in terms of investment returns in Nigeria. So if you're an investor in Nigeria and you are buying stocks, or you are doing money market, or you are doing bonds, or you are holding Bitcoin, or you are just holding dollar in your hand, what have those asset classes returned to you for this week and for the year to date? So it's a good metric to have, just so you can take a look at it. And it gives you an idea of if Nigerians and the Nigerian economy is what we call risk on or risk off, right? So let's look at the chart. Again, it's very, very simple to follow. Stocks have done this week about 2.5%. They are up, stocks 2.5%. This year, Nigerian stocks, if we're measuring the index, the all-share index, Nigerian stocks are up about 30%. Tidy because we're beating inflation. So if you are buying all the stocks, see how it says the NGX all-share index. What that means is if you are buying all the stocks in Nigeria, you are getting about 30% average return there. Money market is doing pretty well again. Money market is short term. You are putting money for short term into a fund, right? If you are doing that, then you are doing about 14% this year, about 21%, sorry, this year, about 3.35%. It went up this week. Bonds about 14%. But look at Bitcoin. Bitcoin is about 15% for the year, right? Just 1% growth this week. High volatility. So in Nigeria, if you are doing money market that has lower risk, you are making more money than if you are buying Bitcoin and holding Bitcoin. That's crazy because Bitcoin as a high risk investment should pay you more. But money market, which has zero risk, is low, very, very low risk, is paying you more than Bitcoin. So that's crazy for Bitcoin there. Then what about the guy just holding dollar, just saying, I'm going to get my dollar, put it in my pocket? They are doing about 7% for the year, right? These guys don't want any risk. They don't want any story whatsoever. They want to avoid any risk. They're doing about 7%. So the story is that if you're Nigeria is risk on. If you're taking risk, you seem to be making money in Nigeria. That's the story that we have right now. If you're investing, you are making money. So that's what gives you an idea. Don't don't take this as a go and buy stocks. This tells you what the economy is doing. Then you can sort of price yourself in to that economy, as it were. All right, folks, let's now try to transit into our topic of the day. You know, what we want to talk about today. Well, we're asking the question really, if I want to buy stocks, right, should I go buy the all share index, in all the stocks in Nigeria. So let's say I want to build a portfolio. Am I better off going to buy, for instance, all the stocks individually? So I go buy Dangote, MTN, Access, GT. I buy all those stocks individually. Or should I just buy an index whereby if I buy one index, I get all the stocks, which is better for me? Because again, like I said, in investing, there's no right or wrong answer. It has to do with what you want to achieve. So first of all, what are we talking about when we say index? Index is just a basket where we put all the stocks that we're interested in. And then from that basket, right, we want to then take what we can buy from that basket. So if we buy the basket, we're buying everything in that basket. Nigeria has got two main baskets I want to talk to you about today. There's the NGX 30. So the NGX 30 are your blue chip. These are the largest, most liquid stocks on the Nigerian stock exchange. So your MTN, your Airtel, your Dangote Cement, your Zenith Bank, that's what's going to be on the NGX 30. So if I buy the NGX 30, right, I bought a share of all those stocks in that NGX 30, in the top 30 highly capped stocks in Nigeria. Easy. What about the NGX ASI, the All Share Index? Same thing, if I buy the NGX ASI, I bought all the listed companies, hundreds of stocks that are in that basket. So to be include the NGX 30 plus all others would be in the All Share Index. So it's either I buy everything in Nigeria or I say I want to buy NGX 30. Again, which is better? So we're asking the first question, should I buy the individual stocks in the NGX 30 or should I buy the index? The number two, should I even buy any index at all or should I just go and buy individual stocks? So you see two questions there that give us more illumination, shows us how to invest as we go along. You're going to see what the answer is, and I hope that will trigger a few questions in you. So if you're interested, these are all the stocks that are in the NGX 30, your Airtel and their weightings, right? So Airtel is about 12%, BUA about 9%, GT about 4%. So it's really based on your market cap, right? Then you are in this NGX 30. So let's go to just an overview and say, okay, what if I wanted to invest? Let's compare the NGX 30, the NGX all shares. So all the stocks in Nigeria, we're going to compare all the stocks in Nigeria as of today, right? In the past decade. So we want to do 10 years so that we can know for a fact where should we even invest. Because Kalu is saying do NGX 30, but you're saying no, I'm a money market guy or I'm a bank guy. I hold dollar guy. Why should I even buy stocks in the first place? So I want to show you why you should consider having an exposure to equities in the first place. If you look at this chart we're sharing with you, right? We're talking about just the income now, just the income, not the appreciation, just the income. So if you put in money for a decade in Nigeria and you bought the index, the NGX index, and you just got dividends, you get about 4.2%. If you just bought the stocks, forget about the appreciation, just the income you got, 4.2%. What if you bought the all share index? Almost the same, 4.6%. But if you did money market, right, money market investment, so you invested in this short-term money market to get a return, you're going as high as 12.5%. It's not beating inflation, but it's 12.5%, right? If you simply did dollar, you're going to get about 5.8%. Be aware that the dollar is the USD yield, not Naira, because you're buying a dollar fund. So just looking at this in terms of return, again, if you are a retiree or if you want income, then it tells you that you should be doing more of the money market, not the stocks. So you don't do stocks because they are paying well. You do stocks because it meets your objective. So if you are looking for income, you're a retiree, you don't want to take any risk, you can see where the income flag is taking you to. It's taking you to money market in Nigeria, right? Now let's look at this again, right? But let's now compare the total return. So now we're looking at both the dividends, both the income you're going to get, right? But we're also comparing it now with the appreciation in the stock. So we're saying, okay, I buy Dangote at 10 Naira, it goes to 20 Naira. What is the return on that plus the dividends Dangote will give me? plus the dividends. So it's now total return, which is the price growth, and I'm reinvesting my dividend. So if I look at the same companies I've looked at before, the share indexes, the money market fund, and the USD fund, and I said if I invest 10 years ago, 2016, what would it be worth in 2025? And I'm looking at my price appreciation, and also I reinvested my dividends. So I didn't take any money out. What would I have? If you look at this, if you then do the NGX 30, you are still at about 659,000, just below 700,000. That's how much you'd have gotten, just below 700,000. If you did the all share index, so you bought all the shares in Nigeria, you held them for a decade, you used 100,000 naira in 2016. You bought all the shares in Nigeria as at 2016. You held, you sold, you did all that, you reinvested your dividends, you would be sitting about nearly just below 800,000 naira. That's where you would be in terms of your return. What if you did money market? 357,000. So you see how it's flipped around. If you did dollars, about 257. So why is there a flip? Because now we're talking about the appreciation of the underlying assets. If I bought Dangote cement in 2016, if it was around then, of course, the price has appreciated, i.e., my capital has appreciated. Hence, if I add that appreciation in capital to my dividends, I'm getting much, much more than if I just took income. So there are two learnings here, and look at how we've sort of laid it out for you. The stock market delivered the highest nominal. Nominal means we haven't taken inflation into account. Nominal growth in Naira terms. So just in Naira terms, over a long period of time, if you invested in Nigerian stock exchange, all share index, you bought everything, both the losers, both the gainers, you'll be nearly under 800,000 if you put 100,000 in. That's the highest. The USD fund, so you did a dollar fund, it's going to give you the best protector of your naira. It's not giving you that high return. Remember, that's a dollar. That dollar return is the dollar return is in dollar. So you are getting a protection of your naira, but it's not growing. It's protecting, but it's not really growing. It's matching inflation, but it's not growing. Then the money market is like in the middle. It's giving you good steady income, but of course it's lower if you compare it to equities because it's giving you just income. But your 1 million isn't becoming 2 million. What I mean is your principal stays the same, but you're making income on your principal, which is different from if I buy Dangote sugar or Dangote cement. My Dangote 1 naira can become 2 naira. But when I buy money market, my underlying investment is not going to double. The principal stays the same, but I make interest on the principal. I can reinvest my principal and make more, yes, but the underlying investment stays the same. So again, what's it telling you here? If you are going to be a long-term investor, equity seems to be where you want to go to. If you are a long-term investor but you need income, money market seems to be the way you want to go to. Right? If you just want to don't want to take any risk, you just want to hold your principal the way it is, you don't want any stories, you want to pay rent tomorrow, maybe you do the dollar. But time is now an important element in your calculation. Time, because the longer you stay, the longer you reinvest your principal, the more money you are able to make if you are exposed to equities. That's the story this chart is showing us. Let's go on, right, guys? Let's now look at this. Again, someone's going to say, but Kalu, we want to look at it in terms of if I'm buying the fund or if I'm buying the individual stocks. I got you. Let's start first by asking ourselves the question, should I buy all the stocks in Nigeria, which is now going to be the NGX All Share Index as a fund? Should I buy all the stocks in the fund or should I buy just the top 30 stocks? Which one should I buy? Just the top 30 or should I just buy everything? So again, we looked at that for you guys, right? Over 10 years, again, if you bought just the NGX 30, you're making about 559%, right? That's your return. Same way, if you bought all the stocks in Nigeria using the NGX All Share Index, you're at about 696%, just nearly 700%. So again, having an exposure to all the stocks in Nigeria tends to give you a higher return in terms of total return, total performance, right? And then we look at it again for the year. For the year, it's almost equal, but you still see the all share index at about 29.8, the NGX 30 at about 29.3. So we're going to go into why the NGX or the all share index is doing better than the NGX 30. Keep in mind, what's going on is this. If you want more stability, you want to buy a stock, you don't like the volatility. So you want to be in equity market, but you don't want the volatility. Then the NGX 30 is more or less what you want to look at because it's got the highly capped stocks. Because they're highly capped stocks, their price volatility is less than the all share index, which has more of what we call the small caps. So what this is showing you is that if you want to buy stocks for the long term, but you don't really like the volatility, you want to stay more of the safety side, then the NGX 30 is your baby. But if you're fine with the volatility, you want to have more exposure to growth, then the all share index is more like where you want to look at. And that's what the chart is showing you there. That if you want that growth with that risk is the all share index. If you want the growth with less volatility, is the NGX 30, right? Let me do a quick copy for the folks on Twitter, right? So we're getting along clearly. Oziem, I see you. Once we're done, I'll just add you and you can speak. Just hang in there for me. Let me just paste this real quick and I'll come to you. All right. So real quick, guys. All right, so let's continue on our chat there. Like I see your so again, yeah, the NGX 30 and the NGX all share index are all they can have the same components, right? The NGX 30 is your high caps. The all share index is everything. So you're talking about everything, both the high caps, both the low caps. So the high cap stocks, what we call your blue chip stocks, are going to give you that exposure to the market, but they'll give it to you with less volatility than the all share index. So it's not less volatility than other asset classes, less volatility than the all share index. We're comparing the all share index to the NGX 30. That's where that volatility comes in. So you get the more volatility, right? But you get the higher potential returns when you invest in the Nigerian all share index, which is all the stocks that are listed. So let's keep going on, right? Let's now compare, because I hear someone saying, but Kalu, inflation in Nigeria is just too high. I'm making 20%, but inflation was 30%. What's going on? I would like you to give me this number, but take away inflation and then show me what my real return would be, just so that I can compare and see what I'm doing, because I don't want to say I'm making money, but I'm not really making money. So again, we got you, guys. We got you on that, right? So let's look at what we are here right now with this slide. We're comparing the inflation adjusted numbers for the NGX 30 and the NGX all share index. Again, if you look at this, what you can see is clear that when you factor in inflation into Nigerian returns, they then tend to really come down substantially. So if you look at, let's just take the Nigerian all share index. Over the decade, 10 years, 2016 to early 2026, real returns, right? Let's look at the returns. 10 years, 2016 to early 2026, you are doing about 275. Again, guys, I don't want you to, because it was very hard to get the actual numbers like in Nigeria to say, okay, what is the share price for this, which we then use to calculate the return. It was very, very hard to get where the starting numbers were. But what I want you to look at is the trend. The numbers may not be exactly 275 or 200, but the trend is your friend. It just gives you visually what we're trying to communicate. And what we're trying to communicate with this slide is that when you look at inflation and you factor inflation into the returns in Nigeria, those returns tend to fall drastically. So if you look at this number, right, 275 is your number before inflation. When you apply inflation, you're looking at about 7%. This is over a 10-year period from 2016 to 2026, from 275 to about 7, because we've had high runaway inflation in Nigeria that has eaten. Remember, this is a cumulative. So every year when you make 40% and your inflation is 20%, you've actually made that just that 20%. So over 10 years, right, the all share index still beat inflation. Over 10 years, it still beat inflation, right? But when you then compare the yield, you stretch that out, the return does tend to fall. It's no longer as high as it was when it was just nominal. It's beating inflation, but it's not as high as it was. And it's that inflation that is a key big problem in Nigeria, because when we don't take inflation into account, then we're actually making money in quote, but we're really losing money, or we're not taking advantage of other asset classes that could perhaps give us that return. So if you keep this in mind and you go back to the guys that were simply holding their dollar, you see how this plays out now. Those guys that are holding their dollar are making about 5%, when money market doing about 12%. They are also doing not as good. They're making about 7%, 1,000 naira. I mean, when the equity market is in about 796,000 naira. But their returns are more stable because they are not converting. Dollar is not working with Nigerian inflation, it's working with the US inflation. So they have a more streamlined, much more inoculated return, if you want to use that word, to describe how their returns would be if they were investing in dollar than if they were investing in naira. So I hope that sort of makes sense for you guys. Yeah. Okay. So let's continue to the next slide. What we've seen is that smaller is faster. Smaller is faster, right? If you invest in the NGX 30, you are buying the very large cap stocks in Nigeria. So again, 2016 to 2025, your return is just about 559%. Huge number, right? But if you compare that to the all share index, i.e. the all stocks. So again, this chart might be a bit confusing, but look at what we're saying. If you take the NGX 30, just the top 30 stocks in Nigeria, you're making about 559%. If you do all the stocks in Nigeria, doing about 696%. So what's the difference? If you then do the rest of the market, which is you say, listen, I'm going to invest only in the market without the NGX 30, you're going to do about 900%. So look at again what we're saying. Just buying the large caps in Nigeria gives you stability, but a lower yield when compared to the other indexes on the Nigerian market. So if you buy just the top 30 stocks, 559%. If you buy the entire market, which is the NGX stock 30, all the stocks in the Nigerian market over a 10-year period, 2016, 2025, about 696%. But if you then said, okay, you should go the entire market, strip out the large cap stocks for me, take out the Dangote cement, take out the Airtel, what would be my return? They're going to make about 900%. There's a big but with that 900%. That 900% is highly volatile. You could have lost your money in 1 year completely. Remember, this is a 10-year return. If you try to do this over year by year, you could have lost your money because of the high volatility. But the numbers are just giving you the average across the term. So when we say smaller is faster, the growth engine, the growth in the market is coming from the smaller companies, the smaller caps, the better glasses. That's where the growth is coming from. But the stability is coming from the Airtels and the Dangote cement, if we could use that term. So that again, that goes back to when you want to invest in the market and you ask yourself, am I buying small caps? Am I buying large caps? Again, there's no right or wrong answer. It's based on what you want to achieve. If you're trying to make money quicker and expose yourself to risk, of course, you'd want to do small caps. But if you just want to buy stocks, get that exposure with less volatility, then of course, the large caps are going to be your friend. So I think we're now we're answering a bit of your questions. Should I buy NGX 30? Should I buy equities? Should I buy large caps? Well, give me the numbers, and I'm going back on purpose for 10 years. So we don't have one good year and one bad year, and we're using that to make a recommendation or not. We're saying go back 10 years. This is what the data is showing you, right? And then with that data, you can make your own recommendations. There's no good or bad stock. There's only you doing stuff that meets your objective. Let's now talk specifically about those low cap stocks we talked about, the high growth stocks. And you're going to see the problem with those stocks. Probably not the word, but you see what I'm talking about. The highest returning stock in Nigeria in 2025, the highest single returning stock in Nigeria was a company called NCR Nigeria. Over a 12-month period in all of 2025, that particular one stock returned 1,354%. So if you bought it in January and you did not sell till December, you would have returned about 1,354%, which is astonishing because it's beating inflation a million times over. So if you hold 1,354, what's the problem with these numbers? It assumes you hold. Most guys that buy small caps are your scalpers, your traders that are trying to get in and trying to get out. If you look at this same NCR stock, but let's say I bought in January, the same buyer buy in January, but I sold in October. I didn't hold till December. I sold in October. My return falls to about 355. So I go from 1,354 to just 355. Again, don't look at the numbers per se, but what am I trying to say here? Because those stocks are very volatile, when you buy determines the return you make. If I had bought NCR in January and I waited till August, nothing was happening, I sold my NCR, I wouldn't have made 1,354. And if I had gone into NCR in August and I held from August to December, I would have gotten a massive, maybe nearly 1,000% return. Not the same with Dangote Cement or Airtel. Those guys are giving me a consistent return. But once I come to the smaller caps, the price volatility is very, very high. It's not just smaller is faster, but smaller now makes you time. And remember, when you are trying to time the market, that's when you get into trouble because you're timing when to buy and when to sell. And you then run into this issue of, oh, when should I buy NCR? If I bought NCR a few days ago, I'd have made 1,000%. But if I waited, I lose that 1,000%. I don't get it. So that's the problem. With small caps, you are timing. But with the larger caps, you are riding the wave of the equity market in Nigeria, the risk and reward. You're just riding that out. Small caps give you the should we say the boost. It's like taking Red Bull. But if you take Red Bull, too many Red Bulls, or you take too few Red Bulls, it may not work. But large caps are just you're taking your coffee every morning and just going on and on, right? So again, lots of insights we're giving you here. Our research team did a lot of work here. Lots of insights we're giving you here. Let's now come to the question of the day, because we've given you all. If we didn't give you all that insight, we really can't start talking about NGX 30s to you now. It really wouldn't make sense to you. Nor can we talk to you about small caps and all that. Now we've told you about NGX 30 and about the NGX All Share Index. We've told you that individual stocks over a longer period do better, right, than money market, than holding dollar. We've even showed you which ones, the small caps tend to run faster, but the large caps tend to give you more stability. We've shown all that to you. Let's now ask the question of the day, which is better? If I had ₦1,000,000, right, should I buy the individual stock? Should I go and buy, I want to buy my NGX 30, or should I go and buy the individual ones one by one? So I'm going to buy Access, Dangote Cement, all those guys one by one. Which one pays me? Again, remember there's no wrong answer. What we're asking here is that which one should you do based on your own objectives, based on your own risk profile, and even based on the funds that you have available. So if you look at our chart, we've given you that answer. If you are buying individual stocks, you're going to do 30 trades, i.e. for the NGX 30, because you have to buy those stocks, 30 of them, to create your own NGX 30. You have to buy those 30 stocks. On the average, it will cost you anywhere from 4,500 to about 7,000 to buy those stocks, which is going to be your broker commission. You're going to give the broker about 7,500 shares. Ongoing costs. So after you've bought them, would you pay any ongoing costs? I don't think so. No, the answer is going to be no. Why? Because you are the one managing your stocks. You're not giving your stocks to a broker to manage. So it's just you managing your stocks. So no ongoing cost. Management, you handle everything. That's a big flag right there. That's a big, big, big flag right there because you're the one doing it yourself. What if you don't know what you're doing? And ROI, of course, you are now tracking the NGX exactly, but it's a big plus. You are not rebalancing. The NGX 30 does rebalancing automatically if you buy the index. When you buy it yourself, you have to do your own rebalancing, right? And of course, look at the kicker. What we surmise is that when you want to buy the individual stocks, it only makes sense for you if you have 10 million and above and you know what you're doing, which means you know what NGX is, you know what inflation is, you want to trade by yourself. This is when you should only buy individual stocks. If you don't know what you're doing and you go buy the NGX 30 yourself because you are not rebalancing, you might now have more Dangote cement than Access Bank. So you are really not buying the index because you don't know what you are doing. So if you have more money, you want to go into the NGX 30 if you think that's a choice for you. But if you have a million and below and you buy the ETF or the equity fund, your upfront trade is just going to be one trade, just going to pay once. So you're going to pay the broker once. So you're going to pay about from 500 to about 1500 once. There's an ongoing cost because when you buy the fund, you pay the asset management fee. So you pay about 1.6, 1.5% based on what your asset value is. But what do you get when you pay those fees? You are getting professional managers. Let me give you a reason why professional manager is very, very important. Last year, I showed you the most important stock last year was the NCR, right? Last year, the second highest capping stock last year, I don't know if I should mention the name. I'm not getting in trouble. I don't know if I should mention the name of the company. It's a bank. It's headquartered in Abuja. It does property. That was the second best performing stock in Nigeria. If you look at from January till December. But in February, this company was delisted. In February, delisted. So if you had gone and bought that stock, right, it would have been delisted. When did you know it was going to be delisted? When would you sell? But your managers, because they are in the market, they would know. So they would sort of get you of that stock. They will do the personal trading and buying, get out of it for you because they know more better than you. It's just a fact, right? And then they are managing it for you. You are not getting dividends that you have to go pick up and pay into your account and compound. When you buy the fund itself is compounding because they are paying your dividends back into the fund. So once you hold the fund, it's already compounding. You don't have to go write letter to registrar, all that kind of stuff. No. So management is a big thing. It looks small, but that's what you're paying for. If you don't have the time, you live abroad. Are you going to run to the registrars every time you want to cash a dividend? You don't want to do that. So you want to get management to do that for you. So again, if you are a retail investor, you have less than a million. I mean, a million, that's going to be a million set, but you don't have millions. You want to go the fund route. You want to go the fund route. If you have the 10 million that you can give to a broker, you can call the broker, you can say, buy this for me. You can call the broker and say, hey, how is this going? Then you want to go the individual route. Which one do you think Warren Buffett recommends that investors do? Do you think Warren Buffett recommends we do the individual route or do the fund? Warren Buffett does the individual, but which one does Warren Buffett recommend that you do? Warren Buffett recommends that you do the fund route. He says he's going to tell his kids to just buy the fund. If left to him, the only advice I've seen Warren Buffett give is buy the American mutual fund and move on. John Bogle, same thing. Buy the fund, move on. So these are the guys that know what they are doing are telling us, hey, buy the fund. So again, there's no right or wrong answer. But if you've got the money, buy the individual stocks if you want to, if you have the time and the expertise. If you don't have the money, go ahead and buy the fund, right? That's essentially what this is telling us. All right, just make sure Twitter guys got all this. Let me check on them. Yeah, they did get it. Okay, fantastic. Let's now look at the next slide, right? Yeah, this we can skip this one for now. We'll skip this for now. Let's come to now. So we've given you the answer. Should you buy individual stocks or should you buy bonds? That's fine. So now, which ones do we want to look at to buy? Again, I'm being very, very careful here, guys. I've put a few ETFs on this slide. I'm not making a recommendation. I'm just saying based on cost, experience, and the objective of the fund. If you were trying to buy anything that would track the top 30 stocks in Nigeria, this is what you should look at. Let me give you on that caveat. In America, I would always tell people that ask me, oh, I want to buy ETF or I want to buy mutual fund. Which one should I buy? I always go ETF because ETFs have some tax advantages and also you can trade during the day. These just seem to be a bit easier for folks to trade with, and they're also cheaper in terms of the expense ratio. In Nigeria, the ETFs are not as liquid as the mutual funds. So we have mutual funds, we have ETFs. ETF simply means exchange traded fund. It just means you can trade that stock during the day. But we don't have as much liquidity in the ETF market as we have in the mutual fund market. Keep that in mind. But if you are want to just buy, you want to replicate the ETF 30, you want to replicate, you don't want to do yourself, just want to buy into a fund that does that. What should you get? I've given you three options. There's a Stanbic IBTC ETF 30. You can buy that, they replicate it for you. Stanbic has been there forever, good experience. There's a Betiva Griffin 30 ETF. Betiva also been there for a while. Great guys there. I know a lot of them. They also track that Index 30. That's also going to give you a good yield with performance yield and a lower fee. There's also Meristrend. There's a value growth ETF, right? You can also get that as well. So this is tracking the NGX 30, right? Tracking the NGX 30. And again, like we saw in the previous slide, this is for if you don't have a lot of capital to invest today, like $1 million. So ETFs are far more efficient for buying those top 30 stocks. And remember, why are we buying the ETF? Because it gives us professional management with lower fees. But again, the NGX 30 is also beating over a long term money market, equity, money market, and even holding dollar and holding Bitcoin over a long term. We've showed you that slide before. So if you are interested in the ETFs, these are the guys that I think you should talk to. You can talk to any SEC registered firm. These are just the ones that have come to my that are on my slide, if you want to use that word, right? Okay, let's go. What if I want to get all share index exposure? Remember, the previous slide is talking about ETF 30. What if I don't want to buy the 30 stocks, I want to buy all the shares, the ASI, all share index, because Kalu showed me in this previous slide that the all share index have a better return in terms of dividends and also a better return in terms of total return. So I'm interested in the all share index. So which ones do I think that I am looking at, right? I am looking at, again, I picked three. I picked the Stanbic IBTC Nigerian Equity Fund. I think they've been there forever. I'm not sure either they're number one or number two in terms of the history when they were created. So they've been there forever for you, right? The Stanbic IBTC Nigerian Equity Fund, take a look at them. Actively managed, which means you've got those guys that went to school, that study finance. They are the ones looking at your portfolio, low fees, they're being consistent, right? So look at that fund. There's also the ARM Discovery Fund. ARM Discovery Fund. ARM, again, been there forever. Take a look at them as well. Broad equity exposure, long-term performance, they are also very, very good. There's also the Guaranteed Trust Equity Income Fund, right? So this is, you see what income there. So it's equity, but also looking at income. So that's kind of a twist for you, right? So the objective is growth with income tilt towards the NGX All Share Index. Income tilt, I kind of like that as well. Reliable, retail-friendly returns. So again, these funds are perfect if you don't have the funds to get into invest. Again, like I told you, an early start is the most beneficial financial advice you can get. If you start early, you tend to do better than if you start later. So don't wait for 10 million before you invest. If you don't have the money, you can start this fund with 5,000 naira. Buy into a fund, get the exposure before you then think, okay, you can then do better. Don't wait till you have money. That's my point I'm making. Don't wait till you say, oh, till I get money before I start to invest. Buy into a fund immediately, right? And as you get better, if you want to then have your own index that you can create and buy individual stocks, go ahead and do that. Again, guys, speak to your investment advisor. There are any SEC-registered fund is good, but these are the ones that are on my presentation. If you want to do outside this, you are allowed to, as long as you speak to your advisor and you know exactly what you are doing. What about the rest of the market? Remember, we talked about this rest of the market, which means I go to the stock, the AGX 30, NGX 30, and I remove the big boys from that all share index. So I go to the all share index and I remove the big boys. What am I doing? I want to go for only small caps. I'm targeting that fast growth. I'm looking at growth. I just want those small caps. I'm not interested in blue chip boys. I'm a risk guy. Maybe I'm a 20-year-old guy. I have a long time to invest and compound. I want to run this market and really make a lot of money. What should I look at? Again, I've got 3 funds for you to take a look at. Again, any SEC-registered fund that meets its objectives is good. These are just the ones on my radar. The ARM aggressive, I like that name, aggressive growth fund, right? Growth oriented with significant small mid-cap exposure, right? That's one there. The ICO equity fund, broad equity, small cap bias outside NGX 30. Also like that. UBA equity fund, active selection across smaller and mid-cap stocks. So guys, if you follow what we've talked about from the very, very start, we start off by saying what asset class gives you good returns in Nigeria. We did stocks, we did money market, we did bonds, we did Bitcoin, we even did holding your dollar. And we saw that over a long period of time, if you hold equities, especially equities, the all share index equities, they do better than all other asset classes. Then we asked ourselves, okay, in that equity, should we buy small caps or should we buy large cap? We said it depends. If you want stability, large caps, the NGX 30 is your friend. If you want growth, the rest of the market, which is the market excluding the NGX 30, is your friend. If you want the middle of the road, the NGX All Share Index, which includes the 30 and the other small caps, is your friend. Wherever you want to choose, there is no right or wrong answer. The answer is what meets your objective. If I want high growth, which comes with high volatility, I'm looking at the rest of the market, which is the all share index. I remove the top 30. Kind of funny, right? You remove Dangote Cement, you remove ICO, remove Airtel, MTN, you just go small caps growth. That's what I'll do. If I want stability, but with growth, I'm buying the all share index. I'm buying everything but just all share index. If I want stability and explore to the equity market, I'm buying the all share index 30. So this is the final one we're showing you, i.e. how the funds are in terms of what you want to choose. There's no right or wrong answer, folks. It's you invest according to your objective. You don't invest according to what gives you money. You invest according to your objectives. So having said all that, can we build a portfolio? Kalu, you've been speaking English all morning. Build me a portfolio. If I have 1 million naira to invest, and you told me NGX 30, you have told me all the rest of the market, you even showed me equity and money market. How should I build a portfolio if I don't know what to do? How should I approach building a portfolio? I got you. So look at this slide I'm showing you. Again, we're showing you slides and we're showing you aggressive and we're showing you conservative. What we mean here is age. When we say you are aggressive, look, it's going to be a 30-year-old guy. It doesn't mean you are aggressive like you are shouting or you are no. It means you want aggressive growth in your returns. Same thing with being conservative. It doesn't mean you're quiet, but it means that you're trying to get that money, but at a slower pace with less volatility. So it's just going to be which one likes volatility. Aggressive embraces the volatility to get the higher returns. Conservative is saying, I will chill on the volatility a bit, but I want to get the growth. So if you look at these two portfolios, right, what's the difference? Look at the aggressive guy. You can see there's more allocation towards equity, not just equity, but towards growth equity. So this guy has taken his 100,000. He's put nearly about 75 in ARM aggressive and Stanbic equity. So he's buying the growth in ARM aggressive. He's buying the what's it called, the stable growth also in Stanbic IBTC fund. So he's buying rest of the market, then he's buying all share indexes, then he's going to buy ICO. With ICO, he's now buying the rest of the market. So very, very aggressive portfolio. This is equity only. What you're seeing here is equity only. He's not buying bonds or shares. He's just saying, I want to only be in equities. How should I do my portfolio? The difference with the aggressive, and if you look at the conservative, is how much is being allocated to aggressive growth. In conservative, you can see what he's doing. He has abandoned or left out the aggressive equity fund. He has gone towards IBTC equity fund, which is giving him the equity exposure but less volatility. He's done about 40% there. He's now done a balanced fund using the ARM Discovery Balanced Fund. So it's giving him both that growth and volatility. It's giving it to him in a balanced way. Then he has done the Fidelity Equity Fund as well. So it's giving himself that balance. What's the difference? How much has been allocated to growth, i.e. small caps. When you see growth, we're talking about those small cap stocks. So if you want to make that money in Nigeria, in the stock market in Nigeria, you want to look at the small caps. That's where you can go from 1 naira to 10 naira. But if Dangote is at 200 naira, for instance, for example, you can go from 20 naira to 40 naira. It's very, very tough. But you can go from 1 naira to 2 naira, which is 100% return. But you can't go from 100 naira to 20 naira. It's harder. You see what's going on. So small caps have more runway for growth, and small is faster. Hence, you see aggressive tends to make more return. But with volatility, you can lose all this money. Because when the market crashes, where does it hit first? Small caps. That's where they hit first. People will sell their Dangote cement last. They will sell their small caps first. They will keep their bottom box Dangote because that's their gold in their portfolio. So that's for if you are chasing equity only. What if you said, okay, Kalu, I don't want to do just equity only. I want to do everything. I want you to give me with all asset classes, right? So I want you to give me with bonds. I want you to give me with money market and all that kind of stuff. How should I approach building my portfolio? Remember our disclaimer, guys, this is all educational. You don't have to use this. This is showing you the thought process behind how you build a portfolio. You build a portfolio according to your objective. So if your objective was to grow aggressively, you want to do more of growth stocks. If your objective is just to make income, you want to do more of income. And with this, I've even given you guys the estimated annual yield, and I've also given you guys the total annual fees you would pay if you're going to build this portfolio. So with $1 million on an aggressive portfolio, which means I'm doing a lot more, not just in equities, but in growth equities, it's going to cost me about 17,000 naira from $1 million. That's going to be my commission to buy this portfolio. I'm buying the aggressive growth fund. What does that mean, guys? I'm buying small caps. Discovery Balance Fund, I'm balancing between income and growth. Look at the Chapel Hill Denham REIT. What's a REIT? Real Estate Investment Trust. So I'm bringing in property now into my portfolio at 15%. I want that insurance. I brought property in. This REIT pays me income, but it's buying property. So I'm getting a 2-for-1, 15% there. I brought in dollar fund into my portfolio. So I'm exposing myself to dollar to inoculate my naira from volatility, about 15%. Then I'm doing Naira Money Market Fund, just 10%. Why just 10%? Because I want aggressive growth. My objective is long-term capital growth plus inflation with a Naira hedge. I'm not interested in making Naira today. I want to double my principal. That's the risk I'm taking. Because I'm taking that risk, I want assets that can grow fast, but I'm also exposing myself to risk. The estimated annual yield, if I did this portfolio, again, guys, estimated, right? About 14 to 17%, estimated. So it can be higher, it can be lower, but just giving you a figure there. Look at the conservative guy. This is a 65-year-old guy. It's a bit more conservative. What's the difference with this guy's portfolio? He's doing more of money market funds. You can see he has dumped the aggressive funds. He's doing more of money market funds, but with Stanbic and ARM. He's also doing a dollar fund. He's also doing a balanced fund. So he's older. So because he's older, what's he doing? He's doing income, capital preservation, and inflation protection. That's what the dollar is doing there. He's trying to protect that portfolio from inflation. He wants to get income. So he's doing money market funds about 55%. So these two portfolios, no one is better than the other one. It's just these are portfolios that are addressing the unique needs of the investor. Does that make sense? You don't invest for returns. You invest to match your objective. Guys, we're almost done here. I think this is the last slide. Yeah, this is the last slide. Fantastic. So here now, you guys are okay to ask questions. I hope you guys picked one of two things. What I would advise is go back, play the video, go to YouTube, play the video, or play the audio with the numbers, then stop, look at this charts, and get the learning. I'm trying to compress years of asset management into the slides for you. So of course I'm talking faster and I'm trying to say some stuff, but if you go back and you read them, it starts to make a bit more sense for you. So let's go to Ozioma. Ozioma Onwalozie, how are you doing? Ozioma, you've got the floor. Please go ahead. Ozioma is not ready. Let's hop to Chidubem. Chidubem, how are you doing, sir?
Hi, Kalu. I'm all right.
Fantastic.
I hope you're well too. Thanks a lot. This is really just what I needed as a kind of a newbie, because I'm kind of making gradual entry into this whole financial investment and market portfolio analysis and all kind of stuff. So I was just looking at the table that you shared about all asset classes, where you kind of aggregated for someone with 100 million who want to go aggressively on growth. I see that I think it's the second to the last, where you made a comparison of a 30 and 65-year-old Nigerian.
Okay, I'm on that one, yeah.
Yeah, so, I mean, just out of curiosity, I'm trying to understand why you give the minimum allocation to money market. And maybe can you also use this to throw a little bit of, because I have someone just introduced me to this money market thing like earlier this week, and then like I've been seeing all of the positives about okay, like this is the minimum daily yield you can get, but I also want to understand a little more what are the risks, what are so to say, what kind of in terms of market fluctuations
for the
market volatilities
for the money market.
Yeah, exactly.
So money market, don't let the name make you confused. Money market is just like a savings account that you can put money, take money out whenever you want, but it pays a higher rate of return than savings account. That's just what it is. So when you're doing money market, you are getting about, like I shared the earlier slides, about say 12%. Let's go back and look at that return for money market. That's just think of money market as a savings account that you get much more money than if you put in a savings account. So if you look at this chart, money markets this year is in about 21% this year 21%. So that's what you would have gotten. So when you are doing money market, right, you are saying you want access to your cash, but you also want to get a high rate of return. It's not designed for long term because the rates can go down. What I mean is this: if you do money market today, it's because the rates are, the MPR is about 20. What's MPR? Let's go. What's MPR today is about 26%. So your money market rate is about, you're making 21%, right? If rates go down, your money market is going to go down. But the guys that are buying bonds that you see that are making about 14% today, they've locked in that 14% for minimum 2 years. So if rates go down, bonds are going to go up because they've locked those rates in. But money market rates are reversed. If rates go up, you make money. If rates go down, you make money, but you get that flexibility. So you have flexibility, but you're not locked in. So if you're a younger person and you want to invest in capital, right? Money markets is short term, so that works for you. But if you're a longer term guy, you want to more or less lock in the income you are making. So you do more bonds and the money market, because you don't want, even though you lose money, and I'm saying this carefully, you want more stability than going up and down, up and down. You want to know what you are getting, which is you want that certainty of income than it's going up, coming down. So money market, don't make it get confused. It's just like a savings account. It pays you much, much more. I would recommend you use that instead of putting money in the bank, like just putting money in a savings account or current account. It's also good for your emergency fund. So it's something you guys should do. It's the number one asset class in Nigeria in terms of participation of investors and assets under management. That's money market. Hope that sort of gives you some guidance.
Yeah, obviously, Kalu. Thanks a lot. Just maybe one more question, just a follow-up question, a little bit personal. So I've overheard you talking about, talk to your advisor, So for newbies like us who don't have advisors yet, but are really motivated, like really going into these financial topics, do you offer any related services?
Not really, because I can't do individual. I can't do it. I get asked question all the time. I can't do individual, whatever. This is all my mentorship that I do on the space. After this, I can't do anything else because just too many people asking, right? So this is free. If I had to charge you for this, you'd pay me a lot of money. But this is like not free. This is my pro bono that I'm doing to train the next generation of investors, right? So I really don't have, honestly and humbly, the time for the individual classes. Yeah. But if you ask me people ask me on Twitter all the time, they ask me a question, I answer. Yeah.
Awesome.
Fantastic.
Thanks a lot.
Hey, you're welcome, man. Thank you so much. Yeah.
I appreciate that. Thank you.
Ozioma, are you ready to speak? Ozioma, are you ready to speak? Or should I move on to Mr. Mazi? Ozioma going once, Ozioma twice. Mazi, hey, Mazi, how you doing? Hop right in.
Good evening, Mr. Kalu.
How you doing?
Evening where you are. I'm great. Thank you so much for this space. Honestly, I've learned a lot in a short time. I've learned a lot about the NGX 30 and the all share index. I struggled at the beginning because I started investment basically sometimes in the middle of last year.
Yeah.
So I've been struggling to really understand the NGX 30 and the all share index, but this conversation has given me proper context. So thank you so much. Now, on to my question. I've had a couple of money in a UBA money market fund for a while now, and then sometimes last month I opened the portfolio, the balance fund portfolio, and I was tracking the rate. I said, okay, the rate drops. Should the rate drop at any point, I would go in. So I wanted to top up my MMF recently, and I made a mistake of making a deposit into the balance fund portfolio. I didn't even know. I just assumed that I put the money in MMF. Only for me to check, and I realized that it was because I made a deposit into the balance fund, and it's already been subscribed. As it is, I already lost 1% already. So the question is, what do I? Okay, how does it turn out for me eventually on the long run? Is there going to be a situation whereby, because currently the balance fund is at 23%, is there going to be a situation whereby it goes up or it drops? Because obviously if it drops, I still have to lose more money. So I'm trying to understand where do I stand in a situation like this?
Yeah, So if I get what you're saying, you're basically asking what will happen tomorrow with those funds, right? Remember what what I keep saying. You invest according to your objectives. Those funds are not better than each other. If you want to do balanced fund, that means that you are looking at balancing between equity and fixed income. Who does that? That's going to be a middle income guy, a guy that is maybe 50, that wants to get growth because he wants to grow his principal to retire, but also wants safety. So the answer is, who are you? Who are you? What is your age? What is your objective? Do you have dependents? How long do you have to work? That's the question. That's the question. If you answer those questions, it tells you what fund you should be in. If you're a much, much younger Nigerian, I would even say, why are you even in fixed income, right? Because you have more compounding periods. Like we've shown you, if you are doing stocks this year, you are 30%. So the question is then, why are you in money market if you're a younger Nigerian? But if you are an older Nigerian, I'm going to ask you, well, why are you in stocks? Because it has more risk. You see the question. So there's no right answer. It's who are you? If you are 65 years old, you should not have a larger exposure to stocks. If you are a 25-year-old, you should not have a larger exposure to money market. It depends on who you are. So rather than looking at the fund, Mazi, try to ask yourself, who am I, right? If you know who you are, when I mean who are you, your age, your objective, your attitude to risk, and all that. If you get that right, it then tells you which fund you should be in. Not sure if I was able to answer your question there, but that was my best try. Okay, he's now speaking back. Let's get 59. 59, how you doing? And let me go to Twitter as well.
No? Oh, sorry.
Yo, Mazi, was I able to answer your question?
Yes, you did to a very large extent. What I normally do is I try to spread my risk across. I'm invested also in stocks, in a couple of the stocks as well, and I'm in my mid-30s.
Yeah.
Okay, and then my risk threshold, I'll put my risk threshold at somewhere around 60 to 70. I like growth, yes, but then I really do not want to just lose all my money. I have a certain appetite for risk, but not all in appetite for risk. That's why I would never look at what's it called, the equity funds. I'm more comfortable doing the balanced fund at the MMF and of course the stocks also.
Okay.
Yeah.
Yeah, again, it's very, very important. I'm stressing it's very, very important. You invest according to your objectives, right? If you want to go to Kano and you want to take cement to Kano, you're going to use a trailer. If you want to go on a date in Lekki with your girlfriend, you're going to use a Ferrari. So a Ferrari is not better than a trailer, but a Ferrari cannot carry cement. So very important that you invest according to your objective. Yeah, Mazi, thanks a lot.
All right.
Yeah, let me get.
Thank you so much.
You're welcome, Mazi. 59, go ahead.
Yeah, Mr. Kalu, thank you very much. How do I say it? I won't say I'm impressed because I've been following you for a while, so this is not impressive coming from you. I don't know if you get what I'm saying.
Yes, I do. Thank you. I appreciate it.
I expect something like this from you. So, but my question is, let me just go straight to the question. Now, the Nigerian stock market has only been performing well since 2023.
Only?
Yeah. Well, the NGX, I'm looking at it on NGX 30 now. Almost from 2009 to, let's say 2022, it was mostly flat, really. It was mostly flat. It was not, the performance is not, how do I say it? It's not shooting up the way it's shooting up now. The past 3 years has been when this Nigerian stock market actually became very impressive. I don't know if I'll be very attractive.
Not really. But
well, if the graph I'm looking at here is any true, which is on ngxmarket.com.
Again, if I've shared, I don't know if Sorash Chatter is shared. If you invested in 2016,
yeah,
you did money market, you held your dollar, you'd have made more money just invest in the NGX All Share Index in Nigeria. You'd have made from 2016 to 2025, you'd have made more money in the stock market. I think there were 2 years in the last decade, where Nigerian stock market was the best performing in the entire world. I think one was in 2022 when Dangote was doing the rights issue, when Dangote was doing the buyback for Dangote Cement. And Dangote Cement was the highest cap stock in Nigeria in the NSI, and it took the market up. That was in the whole world. So it does do well. I think currently right now, for the last 2 years, Nigeria is beating the US market currently right now. Nigeria is doing better.
I'm just a bit concerned for like the long term of the long term situation in the market, because it's heavily dependent on government policies.
Just like any other market, right? Just like any other market, correct?
Yeah, but when these our markets move, they don't move in a very friendly manner. They don't drop 5% or 8%.
Okay, what's your question?
They can do 10% in a day.
Which
So
market?
my question is just where do you see this thing long term? Because as a young guy, when I'm investing and when I'm picking stocks, basically I don't pick stocks. I just buy ETFs. It's easier to buy ETFs. So when I'm picking stocks and when I'm buying ETFs, I'm not buying it because I want to sell it tomorrow. I'm not buying it because I want to sell it next year. I'm not buying it because I want to sell it in 5 years.
Understood.
So I don't know. I'm just a bit skeptical looking at the long term and how political this our entire country can be and how the politics just has a direct effect on the NGX. So it's just that's just something I'm worried about.
I think it's a fantastic question. Essentially, you're asking, is it worth it? Is the risk worth the return, right?
Long term, yes.
Okay,
short term, yes. In short term, perfectly. But long term, I really don't know.
Okay, so I mean, the way you answer that question is to go back to the gurus of investing like Mr. Warren Buffett. What does he say? He says you invest when people are skeptical. When people are confident, you sell. That's the only way you make money in the market. I can give you another example. Would you have bought Messi when he was 5 years old? He hadn't played for Barcelona. He was this small kid that had stunted growth. You know, there are many kids that could play like him. Would you have paid $1 million to get 10% of all future income of Lionel Messi? Would you have done that? What do you think?
Of course, I would have done it.
Why would you? Wait, pause. Pause. Why would you do it? Why?
If you know tomorrow, you would have done it.
No, but why would you? Yeah. So, but why would you have done it? You said, why would you have done it?
No. I'm saying if you know tomorrow.
No, but the question is simple. Would you have put $1 million to buy a 5-year-old?
No, you won't have done it. But
okay.
You don't.
But Barcelona, but Barcelona did, right? Barcelona invested in Lionel Messi. And many others, and many others failed. Messi performed, and now he's a large cap stock with income and growth. The point I'm making is that if you wait when you want to invest, Nigeria today is at a discount, which means that we are not doing the best we could be doing. So everything you see in Nigeria is a discount. Nigeria today is operating without constant power supply. And the economy is going about 4.3, 4.2. Can you imagine what will happen if someone comes and fixes power in Nigeria? The economy will double. The question is, can they fix power? Not if they fix power, it will double, but can they fix it, right? So your question is basically saying things are bad, so I don't want to invest. Somebody else can say things are bad, I'll invest because tomorrow when things get good, I'll make money. He can be wrong, you can be right. The same issue of you go to a town, there are no shoes. Wow, this is a market for shoes. You go to a town, there are no shoes. They're not going to buy my shoes. They don't wear shoes. No one knows tomorrow. Nobody knows tomorrow. I was in Nigeria when stock market was dead. There was no bond market. There was no crypto. There was no internet. There was nothing. People invested back then. And they are the quote-unquote people that are billionaires today. If you wait for things to get organized and good, you won't make money because you're going to be investing when everybody is investing. If you buy this today, you are taking a risk that things are going to be good or things could go bad and you lose your money. There is just no way of knowing.
Yeah, like I said, I'm not waiting. I'm actively investing, like I said. I don't even pick stocks because most of these, there's like a new set of influencers on Twitter now that make it sound like picking stock is something you can actually be good at. And if experience and the little I know has shown anything, is that you cannot really be good at picking stocks.
You know, I've only given, I don't know if it's what I can use the word advice. I've only said one thing on Twitter to people, and I said, whatever you do, especially if you are young, buy the VTI, forget about it. That's the Vanguard, VTI, or any equity fund that tracks the US market. Buy it, forget about it. If you go back 100 years, the best performing asset class in the entire world, when I mean just looking at Japanese euros, Japanese property, Belgian commodities, whatever you want to bring, the best performing asset class over a extended period of time has been US equities. Over time. Right now, for the last 2 years, Nigeria is doing better than US equities, but that's just 2 years. Over time, they have been the best performing. So Warren Buffett had people where he read, don't always bet on America. So if you buy US equity today, you are buying at a discount because eventually the markets tend to go back to default. You can't wait, right? And investing is not a gamble. Investing is it's like a Lagos go slow. You know how Lagos go slow is? There are 4 lanes. You are on your lane is the right lane. The other 2 lanes are the lanes that are trying to cut. You'll be on your right lane. The guys that are cutting are moving. They are moving ahead of you and they go in front of you. You will now leave your lane and say, let me also cut. The second you leave your lane, they'll stop that external movement and then your lane starts to move. But if you stay on your lane, eventually you get to where you're going to go to. But you don't know when to move. Should you stay on your lane? Should you move? You don't know. So if you simply stay, have a long-term objective, you're going to get to your destination. You can cut the line by taking margin loan, taking a position, and it moves you in front of the line. Maybe you see the convoy passing, you join that convoy, you move ahead, and within Nigeria, and it takes you ahead. But ultimately, you are in that same traffic jam. And if you stay in your spot, the line always moves. You can come out and you get stuck, and they'll catch you for doing one way, or you can stay on it. But we don't know. If you stay, you are the quote unquote mumu that has still in its lane, while others are moving. If you come out, they come and last man will catch you. So how you avoid all the influencers and folks online is to what is your objective? What do you want to achieve? Then invest according to your objectives. If you want long-term growth, invest according to long-term growth. Don't chase returns. Don't chase latest thing in town. Invest according to your objective. You can't go wrong with that because it's your objective. If Bitcoin is doing well, but you're not a risk guy, you ignore it. If you are a risk guy and Bitcoin is doing well, you embrace it, you avoid money market. It's what is your objective. Once you do it that way, you should be fine. Yeah? Fantastic question, sir.
Yeah, thank you.
All right, fantastic. I hear you. Wafo, how you doing, Wafo? What's up? Mr. Wafo, your hand is up. You've got the floor. All right. Let me read this quick question on Twitter. Can you go back to, you guys actually go back to this slide where we're approaching the 1 million naira? Just to be clear, the rest of the market, just want to make this clarification for you. The rest of the market is the entire all share index, but you remove the high caps. It's just invariably saying small caps. Just a nice way of saying you want to only be in small caps. If you look in America, they have what they call the Russell index. The Russell index is more or less tied in the small caps market. That market tends to be the fastest growing. It grows faster than the high cap market, but it's also the most volatile because that's where those guys that are trading that market do not have the staying power. So once inflation goes up, or there's a market downturn, or there's disruption in the economy, that market tends to suffer first. But in terms of the growth, that market tends to pick up on the growth first. So these stocks you are seeing here are the stocks that are exposed to small caps. There are others. There are many stock equity funds in Nigeria that are also exposed to small cap. This is just the ones that I'm just putting up here on the slide. So if you want to mirror this, but you're using, I see the name you're mentioning, I don't want to mention that name. Just go in and read the prospectus or look for a growth or a company that is targeting small caps. You get almost the same exposure. And Nigeria is a small market. We have less than 200 stocks. So out of that 200 stocks, you can know which one is high cap, which one is low cap. NGX 30, we have the constituent, it's there. Just ask Google, give me the constituent of the NGX 30 or the small cap, it will give you. So it's not like America where they have maybe like 10,000 stocks in various markets. Here we just have very, very few stocks that you can actually find on Google, print out that list, and if you want to recreate your own profile or your own, your own index, you can. But remember what I said, does it make sense if you have like 5 million, you creating your own, you buying the individual stocks? You have to manage those individual stocks. If you have less than all that 10 million, just give it to a manager to manage for you, pay the fee and move on, reinvest your dividends. You don't have that time or that skill. But if you have the time and the skill, you're at home, maybe you work at home, you work from a computer, fine. Go ahead and do it. Every week, rebalance, you should be fine. Yeah. So it's not you must do this. We're giving you the what you want to look at before you then take advantage of it and get it done, right? Fantastic. All right, let's get I've got Kemi. Kemi is asking, how do you balance volatility, small cap stocks, and liquidity when selecting stocks, especially in emerging markets like Nigerian market? How do you balance volatility and liquidity? So one thing you have to understand is that if you buy Dangote, let's speak Nigerian in general. If you buy Dangote cement and you want to sell it tomorrow, there's always a buyer for it. There's always a buyer for Dangote cement because it's a high cap stock. Everybody wants it. So you buy it, there's always going to be a buyer for it. If you go and buy, I don't want to mention the company, I don't want to demarket anybody. If you buy a small cap stock, it can go from 1 naira to 10 naira. But when you want to sell it, hope and pray that you have a buyer. Because it's one thing for it to go up on paper. It's quite another thing for you to then sell that stock. There are many folks that will tell you that, oh, I bought this insurance stock, or I bought this manufacturing stock, this small cap manufacturing stock. I made a lot of money. I told my broker to sell. Every day he went to the market, he put it on offer. Nobody did a bid for it. And then the price started to come down. That's when I was able to sell. So you want to be very careful. When you balance volatility, the price can go up and down. But volatility does not equate to liquidity, which means that if you want to get rid of that stock tomorrow, can you find a buyer that will take you out? And that's why those things are very, very risky. Risk is many things. Risk can be you've lost your money, but also because you have your money, but you can't get access to it. You have stocks, you want to sell, you can't sell because no one's going to buy it from you. So again, that's your question. How do you balance volatility? Is going up and down, and liquidity. If you want to do small caps, then is liquidity really your objective? Because if you're looking at liquidity, you're looking at money market and high caps. If you're looking at small cap stocks, you're looking at growth. If it's in America, you would say if you are looking at maybe Tesla versus maybe a Volkswagen. Both are car companies, but Volkswagen pays a dividend. Tesla does not pay a dividend. Why? Because Tesla wants to take its growth and reinvest back into Tesla. So where would you get liquidity from Tesla? Only by selling. But Volkswagen, you get a dividend. So if you are looking at liquidity, I don't think you should want to look at small caps. That's not the main objective of a small cap, to give you liquidity. Small caps are there to give you growth, to expose you to growth. And if you want liquidity, you're looking at maybe the large caps or a balanced fund. I hope that answers your question. Invest according to your objective, Kemi. Yeah, that's what we're preaching here. And Wanfo, how you doing? Wanfo, go ahead. Wanfo? Let me see. Okay, let's get Chidibem. Chidibem, how you doing?
Yeah. So, Kalu, just a follow-up question on this volatility topic you talked on this liquidity topic concerns you mentioned right now. Does this apply?
I'm here. Wanfo is here.
Yeah, Wanfo, once Chidibem is done, just come right back. Chidibem, once Wanfo is done, Chidibem, just Wanfo, hold on. Okay. Chidibem, go ahead.
Yeah. So is this applicable like when you're trying to kind of trade the stocks on your own, or does this also apply when you are using, these on the market apps like, Bamboo and Co?
Yeah, it's the same really. Bamboo, yourself, you are all going to the same market. Wherever you are, if you open an account with Bamboo, you are still going to trade on the stock market. Bamboo doesn't have its own trading. They just take your orders and they send to their broker and they execute for you. Same with you. If you have your own stocks by yourself, you want to trade, you still have to go through a broker. You can't trade by yourself. You still have to go through a stockbroker, whether you are online, whether you are a physical broker. So it's liquidity again that you don't want to make money and you can't sell. If you notice, the NGX 30 only includes the free float, not the entire cap. What I mean is that if you have a company where you have 100 shares, if you only list 5, it's only going to list 5 in the NGX 30. It won't include everything because everything is not tradable. It's only listing what is being tradable. So it's a liquidity criteria of also to be in the market. So that liquidity for me, I look at it as you want to sell, but then you can't sell. So what's the point? You make 100% profit on paper, but you can't sell. That means you're not making 100% profit on paper. So be very careful about that. It's called the profit trap. You make a profit, but you can't sell. That's going to be a big problem for you. Chidubem, are you okay with that?
Yeah, got you. So just one more thing, like, if, for instance, for us who still like got some years ahead of us, is this something which maybe time can fix? If you say, okay, anyhow, this small cap company will someday become a mid-size or grow into a conglomerate.
Yeah.
Would that solve this liquid, because I'm just kind of trying to see what are, so to say, the low-hanging fruits around this volatility, liquidity issues.
All I'm just mentioning to you is that you should be careful about paper profits. All I'm trying to tell you is that small caps in Nigeria grow very, very fast. I'm showing you the slides, right? They grow very, very fast. But paper, a return on paper is not the same as you then selling your stock. That's what I'm trying to show to you. So if you let's pick a small cap stock. Let's pick there's this chart I'm sharing now. I'm going to share it to you on X. Let me just post this on X. If you go to that chart I'm sharing, it's going to give you from 2016 to 2025 the best performing stocks in Nigeria. It's going to give you the best performing individual stocks. What I'm showing is this, right? If you look at them, you would see Presco, for instance, 2026 was the best performing stock. Presco Kumar Oil. That's outside the NGX 30. Those are outside. What about today? Are they now inside? Look at 2025. The best performing stock, Better Glass, right? But they were also outside the NGX 30. Look at Presco, outside. Wema Bank, mixed, in and out, So Presco has been the best performer over the decade. Presco, the best performer outside the NGX 30. But I'm sure if you want to buy or sell Presco, you get your money tomorrow. But there are some stocks that are in that small caps that are not as liquid as stocks that are in the NGX 30. That's why NGX 30 is the blue chip premium stocks. Look at, there's another index called the pension index in Nigeria. The stock exchange has a pension index. PFAs, which are the guys that use the pension index, cannot buy a stock if it does not pay them dividends for 3 out of 5 years. I think that's 3 out of 5 years, right? They can't buy that stock. So that means that if you are looking for income, you shouldn't buy anything outside the PENCOM index. You see what I'm saying? So the same thing with a company. The company has got to grow from being a small boy in quote to a big boy. So it's going to go from a small cap to a larger cap. What is capitalization, price, and number of shares? There's a company called WAMCO. It's a big company by all means, but what is market cap? It's not quoted. It's not quoted, but it's a big company. It sells your pig milk. It's a privately quoted company. When I mean private, it's not listed in the stock market, but it's a large company. So don't get caught up on the small and big. The capitalization is very, very important. It determines liquidity. When you look at your trading, that trading thing they publish in the papers, look at the volume. That volume column is as important as the price. If you see a stock that has very, very low volumes and the price is going up, be very, very careful of that stock. You're going to get into a profit trap with that. So you see the price is going up, but volume is just inching along. That's a price trap. That's someone just going to that market because in Nigeria, the price goes up by 5%. The person will wait for 2 p.m. and buy 100 shares. The price will go up. It's just 100 shares. So there's no volume, but the price has gone up. Tomorrow he'll do the same thing. He'll wait for 2 p.m., buy 100 shares. The price will go up. He keeps on buying 200 shares every day for 1 month. The price will go from 10 kobo to 5 naira, which is a massive gain. But you then go onto your computer and you tell your computer, give me the best performing stock in Nigeria. To say, wow, this company went from 10 kobo to 5 naira. Massive gain. It's going to tell you, buy this company. You then go and buy it because it has gone from 10 kobo to 5 naira. But you didn't look at the volume. You then get into a profit trap. You are in that company at 5 naira. You try to sell it. Nobody will buy from you at 5 naira because the traders know there's no volume backing up this trade. It's just a guy moving it up. You see where I'm going to with this, children? They know what's going on. They'll say, oh, wow, this guy is trying to sell to us at 450. Why would I buy a stock for 450 that has been zero for the last year. Remember what when I posted the NCR result, that result you saw from August, the company went to the moon. From like August, if you had bought that share from January to August, let's go back to that chart. What would you have made? No, you don't have made 1,000%. I'm not saying it's wrong. I'm not saying anything illegal. I'm just saying be careful of buying stocks that price is going up with no volume going up. That's where you get into that profit trap. Does that make sense to them? Yeah, fantastic. All right, one for excellent. Yep, I'm giving you the tricks of the trade. All right, Chidubem, one for hi. Go ahead, please. Sorry.
Okay. Good evening. I just want to make a contribution, and also I have a question too. So concerning the money markets, the money markets you are talking about, I know that a lot of us might still be newbies. So I just want to break it down, so that people can also understand, have more insight on what the money market is all about.
Mm-hmm.
So money markets, in essence, is a market for short-term investments that usually mature within 1 year. They mature within 1 year. For example, you can actually invest in the money market by yourself without maybe going to all these asset management companies like the AROM, Stanbic IBTC Asset Management that Kalu mentioned. So when you buy treasury bill in your bank, you're investing in the money market because every treasury bill matures within 1 year. Now, when you also do fixed deposits in your bank, you're investing in the money market.
Hold up. So just be clear, right? I hear you. You're not wrong technically. But Nigeria has got money market investment, and Nigeria has got treasury bills. Nigeria has got all that. They're all different, right? They have specific money market funds. Those money market funds are going to buy treasury bills. But we have money market funds that I can go to my bank or to my broker and say, I want to input my money in money market. There's, just to be clear.
Yes, Carlo, yes, I'm coming to that. What I'm saying is that the general term, because why those things are called money market funds, because those fund managers, like the mutual fund, the asset money, like the Stanbic IBTC and Co, is because they invest those money in the money market for short-term investment that mature within 1 year, like the treasury bill. So when they pull those funds together, they also invest in treasury bills. They also invest in
I know that, but the point I'm making is that for a layman today, I can go to my bank and say I want to do piggy vest. It's money market. Most people that do that piggy vesting are doing money market funds. That's the point I'm making.
Yes.
So don't make it. I don't want you to get it too complicated by saying treasury. I can go and buy a treasury bill. That's a treasury bill, and I can buy into a money market fund. That's a money market fund. Whatever they do, I'm sure the guys that do the money market fund are buying treasury bills. Yes, but there's something called money market fund in Nigeria that I can buy on Monday. That's what I'm trying to. So I don't want to confuse people too much. I know why I use my words. When I say it's a savings account that pays you more, I know why I say it like that.
Okay, thank you. So my question is, a lot of analysts on Twitter has been talking about this Dangote IPO that is coming up, that people should not, instead of investing in the Dangote IPO because of the float, like the company is only making maybe 5 to 10% available to the public, that the big boys, the mutual funds and the high net worth individuals, they are going to buy off everything and then leave the retail investors grappling. So people are saying that instead of investing in the Dangote IPO, that you should, invest in some other stocks that will benefit from that IPO listing. Let's say, for example, during the American gold rush, the people that actually made more money are not even people that came to prospect for gold. They are the people that were selling the shovels and the pickers and the wheelbarrows that were being used to dig the gold. So they are bringing up that analogy here. So I just want to know what you think concerning this, based on that, concerning this Dangote IPO. Thank you.
Yeah, so look at it this way, right? When you have what's the word to use now? If Dangote offer, the IPO is going to be a massive undertaking. Nigeria alone cannot contain that offer. That offer alone is going to catapult Nigerian stock market to another level. It's going to skew all returns. So this chart you see here that we're putting stocks, money market, once Dangote comes into this picture, it will skew everything. It's so large, right, that it's going to skew everything, number one. Number two, he's paying in dollars. You're going to give him naira, I think, and then you're going to get returns in dollar. When you look at this transaction, I don't think there's any stock in Nigeria where you buy a stock in naira and get dollars. I could be wrong. I know there's dual listing, but I don't know if a stock where in Nigeria you buy dollars and naira and get dollars. When you look at those
Sorry,
two,
Seplat does that. Seplat pays in dollars.
But that's dual listing, right? They're listed in
Yes,
London.
yes.
Yeah,
They are listed. I think they are listed in London Stock Exchange.
okay, but this one is saying that it will be listed in Nigeria. The Nigerian guys will give them naira, and Nigerian guys will get dollar. That's what I'm saying. I could be wrong, but I'm not seeing Nigerian stock that is giving you foreign currency. When you look at these two things, I haven't seen the prospectus, and like I posted on Twitter, you can only analyze when you see the prospectus. But just these two announcements alone, the scale and the size of that undertaking in Nigeria, the fact that it can allow me to diversify my returns tells me that whatever I am doing, I want to at least have an exposure to that enterprise. The question is going to be how much exposure? Do I want to expose 10%, 1%, 5%? That's the question. But should I have an exposure? Of course, you have to have an exposure in such an entity that's going to change the economy of the country. I mean, Dangote is going to be not just for Nigeria, not just even the oil, where this is the only country we're exporting fertilizer to Brazil, to the US, we're exporting petrochemicals to Africa. Look at the diversification you are getting by investing in Nigeria through Dangote. Look at diversification you are getting in your portfolio, in your total return, in Nigeria's tax revenues and all that. So I would say it's been a bit too cute to say you want to buy the shovel and not the gold. Dangote is the gold. If you see the gold field, if the gold companies back in those days had a company like in San Francisco that says, if you buy us, you're getting the gold, everybody that bought that company. There was no gold company. There was gold fields owned by individuals. That's why they sold shovels. So to answer your question, I would say yes, plan, save money for Dangote. The question is how much? Because we haven't seen the prospectus. If we see the prospectus and it comes out, my good friend Lumide said it's not going to be cheap. He was here, it's going to be very expensive. It's not going to be like 1,000 naira per share. That's going to be very, very expensive. So it is what it is. But I would say plan to buy, subject to us in the prospectus, plan to buy. I wouldn't say, that's what I would say. Yeah. Hope that answers your question, sir.
Yeah, thank you very much. Thank you.
Fantastic. I love the questions. Thanks for being here. Let me also address this. Yes, if you hold dollar, just cash, are you saying hold it in your DOM account or invest it in a money market share? I'm talking about, investing this in, they have dollar funds, right? So this dollar is the dollar fund. So when you invest, this 7% is dollar return, not is dollar return. So even though it's not giving you 30%, you are comparing 30% Naira and 7% dollar, right? So keep that in mind that you have to convert back to dollar to compare like for like. So number two, we don't look at the yield. I saw the chart. I see your question again. Someone is saying, why do you have, let me go to the chart. In your earlier chart, someone is saying you had money market at 12%, but in the next chart, it's about 3.5%. What's the difference? When you look at the first chart, we're talking about the return of income. So you take $1 million, right, and you buy money market, it will return to you income of that 12% over from 2016 to 2025. The average return is going to be that 12%. That's what you got on your principal. So your principal is there, but the return you got was the 12.5%, right? But the next chart is now saying compare the total return, which means we are taking the appreciation in the underlying investment plus the dividend return. So if I bought a money market, my underlying investment is not going to change. It's not going to change. I'm simply making an income return on my principal. Now, if I reinvest my principal, I'm compounding, right? So when I compound, that's when I now get that 357,000 naira over the 10 years, right? But now equities then do better when you are compounding because you are taking that profit. It's increasing you bought the share at 10 naira, now it's 100 naira. The income has not increased per se. Maybe they are paying 5% dividend yield, but the principal, what you invested was 10 naira, that is now worth 100. But the money market, the principal is not growing as fast as what you get in the equities. On the flip side, you invested 10 naira in equity, it's gone down to zero. But money market, your principal is never going to go down to zero. It's going to go stay at 100, you get your principal back. But with stocks, you can invest 10 naira and get zero. Remember what I said, the second best performing stock in Nigeria, second best performing in 2025 in Nigeria is delisted. So if you had that stock in December, you are making more than 1,000% return in December of 2025. Then in January, not only are you making zero, the entire principal is gone. It's gone. Unless NDIC gives you something, it's gone. So if you compare the two, if you have money markets in that bank, according to the right of how you get your money back, the money market people are going to get their money first before you. So when NDIC goes to that bank, NDIC will say, okay, you guys have going to be how much billion left? Okay, we're going to give the money market people their money back first before they give the equity pool their money. So that's the flip side. Stocks are a giver and a taker. They can give you 100%, they can take 100%. But bonds, they give you. You get your money back. The question is, will your money beat inflation? But you get it back, especially when you buy sovereign bonds. Nigeria will print money and give you back, Abi. But will that money beat inflation is a question. But whether you get it back, yes, you get it back. So great question. That means you were paying attention. I really like that question. Thank you so much for that question. Who else is here? So I get great questions from Twitter, but I have to read them to get them before I can say them. And sometimes because they are repetitive, it takes me time to read it. So just give me a second. Let me go to YouTube. They also have some great questions there as well. Thank you, Kemi. I'm happy I answered your question. Thank you, Lumide, for being here. Yeah, Alpha Returns. Yes, hello back. Olumide from Moe. Good to be here. Thanks, Olumide. Appreciate you guys. Yeah, guys, if you want to support us, make sure you like and follow and subscribe and share the pages. We do appreciate it. We do a lot of work to get this information out to you. And I do hope you guys find them very useful for that. What else are we talking about? Yes. Yeah. So again, let me go back to, I want to answer this question. Let me just make sure I get it right again. Yeah. Somebody's asked me to differentiate between the NGX30, the All Share Index ASI, and the rest of the market. What's the difference between, he's asking, what's the difference between the All Share Index and the rest of the market? Okay, let me explain again, right? We have the Nigerian Stock Exchange. The top 30 stocks is what we call the NGX30. So the top 30 stocks by market cap are your NGX30. So that's simple. Top 30 NGX. All the stocks in the market is your NGX ASI, All Share Index. So we have the NGX 30, top 30. All the stocks in the market is going to be your NGX All Share Index. That's returning about 696%. Then we have the rest of the market where we say we take all the stocks in the market and we remove the ASI, the NGX 30. So we take all the stocks but remove the big boys. So someone is saying, why would you make more money when you take away the big boys? Because the big boys are giving you stability. When you hear the market did 50%, it means there was losses and gains, and the average was 50%. If you take away the big boys, the market maybe did about 200%. Example, 200%. But that 200% means that it did 500 and lost 300. It did 5 and lost 3, so it did about average of 200. But when you have just the big boys don't do 200 and lose. No, they'll do like, maybe they'll do 50 and lose 5, so 45. So the NGX30 gives your portfolio stability. It doesn't give it that much growth. It's not MTN is not going to grow by 10x in 2 years. They won't. They're just too big. That stock can double in 24 months. But a smaller stock like Presco can grow maybe 25x per year. It's possible. So that stock is giving you growth because the smaller capital base than what you would call than your MTN and Airtel. So that's why when you have a smaller base, just by mathematics, you grow faster, right? It's possible to grow faster. If I go from 1 naira to 2 naira, that's 100% return. But if I do 100 naira, it's difficult to go from 100 naira to 200 naira. So the NGX gives you stability, whilst the rest of the market is giving you the growth in the market. So if you're doing a balanced fund, you're trying to take advantage of both of them to say, okay, I want the growth and I want the liquidity. I want the small caps, I want the large caps. And when I mix them together, I'm able to get a return. That's the differentiation. Small caps is just basically telling you small caps versus large caps. And it's the same even if you go abroad. The Russell is going to grow faster than the S&P or the Dow Industrials 30. But the Dow is your bulwark. Those are your blue chip stocks that are going to be there. They are more concentrated than your Russell, which is going to be your small caps, your SMEs, and all that kind of stuff. Hope I explained that more better for you, Jimmy. Thanks so much for asking. All right, fantastic, guys. We've been here for give or take an hour. I think we start to wind down. Let me just do a summary and then we'll wind down. We're putting 2 hours and we'll just do a summary for you guys and I'll wind down. What we wanted to do today on our show today was to ask the question: should I buy individual stocks, or should I buy? Sorry, guys. Let me just take some water. Should I buy individual stocks or should I buy the index? That's what we'll try to find out. So to answer that question, we first of all talked about what gives you growth and what gives you stability. We said stocks give you growth over the long period of time, and not just stocks. Low cap stocks give you faster growth, but with higher volatility. Large cap stocks give you stability and less growth. So we identified that. Then we went into our slide and we figured out that if I want to buy into a portfolio of shares, I'm better off based on my capital. That's how I should take my decision. If I have sufficient capital, it kind of makes sense for me to buy the individual stocks if I can then get access to a broker. Because I have 20 million, I'm sure they will give me an account officer. I can say, buy this for me, sell this for me. That officer will give me research reports. I can read, I can know what's going on, I can rebalance and all that. So when I have that sort of money, I can buy individual stocks. Doesn't mean I shouldn't buy the index. But if I buy individual stocks, I have the ability to manage my individual stocks. But if I have 1 million, 5 million, why buy individual stocks? Because I'm replicating an already created index. Even though when I buy the index, I pay 1.5, 1.6% per year as asset management fee, I'm getting professional managers. I'm not chasing my dividends. I'm getting all that done for me. So it's worth it a bit for me to do that, right? Because if I buy that, I give someone else to manage it for me, and I am doing anything, right? Great. So we then addressed that question. I said again, it's not right or wrong. It's which one meets your objective. Then we went into say, okay, we've now identified our stocks pay us. Which stocks should we buy? And we broke them down into small caps, middle of the road, and large caps. For the small caps, we're going ETFs. We said ETF, be careful. They don't have liquidity as much as mutual funds in Nigeria. So you can still do this exact same thing. Instead of buying ETFs in Nigeria, you just buy mutual funds in Nigeria. So we gave you the ETFs, the Stanbics, the Vetiva, and the Meristrem for ETFs for the small caps. We also gave you the large caps exposure markets as well, how you can buy them. Stanbic, Nigerian Equity Fund, ARM Discovery Fund, Guaranteed Trust Equity Income Fund. We also gave you that as well. And we even went further to even give you sample portfolios, right? So we said, hey, if you are 60 or you are 30 or you are aggressive or you're conservative, how can you approach this building of a portfolio? We gave it to you equity only, and we gave it to you with other asset classes. We equity only, we asked ourselves aggressive, non-aggressive, which is small caps and low caps. For the other ones, we added property, we brought in dollar funds. So we said, if you are younger, yeah, you want to do a lot of aggressive equities, but we also brought in properties through REITs, real estate investment trust, through the Chapel Hill Denham REITs, and with that gives you your portfolio from insurance, whilst you also have dollar to protect you from inflation and give you a naira hedge. But if you're much, much older, your objective is more or less capital preservation, income, and all that. So you're doing less aggressive equities, you are doing more of blue chips, you're trying to just make income into your portfolio. Again, consult your advisor. You want to invest according to your objectives, right? That's basically was our position today. And I think you guys have stayed 2 hours on this. Like I said, the best way you want to do this again is go back and play the video, look at the slides, look at them. If you have a question, send me a question on YouTube or on the DM. I'll answer, or my folks will answer. That's not a problem. Do support us, because we have a lot of folks that work behind the scenes, getting the slides across for us, doing some research. Like and follow on YouTube, on Twitter, and all that. Do like and follow, and we do appreciate you guys when you do that, right? So let me just end. I have a question here. I hope I'm not doing anything wrong by buying stocks via Bamboo. Is there a better way to go about investing? So all those stocks you see, those SEC-approved investment apps, let me try to remember them off the top of my head. You have Bamboo, you have Cowrywise, I think you have Shaka. I think Shaka has been bought by Rise. So you have Shaka bought by Rise. There are some, I don't know, I don't want to miss anyone out. I know these three. I think there's one more, but I don't mention if I'm guessing. But I know there's Bamboo, there's Shaka, and there's Shaka's bought by Rise. There's Cowrywise. Okay, when you are buying these apps, they are still trading for you on the stock market, the Nigerian stock market and the US stock market. All they are offering you is an online portal to trade. So as long as they are SEC registered, it's almost as if you are buying from a SEC registered broker. So yes, they are okay. There's nothing wrong with buying from Bamboo. All you want to find out is to ask them, are you SEC registered? If they are SEC registered, then you can do other due diligence. If they are not SEC registered, do not trade with them whatsoever. But if they are SEC registered, yes, you can then say, okay, what's your customer service? All that kind of stuff. You can ask for that question. But when they tell you they are not SEC registered, there's no point. Don't even have a conversation with them. SEC registration is not a guarantee of performance, but if anything happens to you and you trade with a company that's not SEC registered, you're on your own. Also remember that FDIC does not cover stocks. They don't cover stocks. So if you lose money in the stock market, there's no cover. But there's nothing wrong with you with going through Bamboo, Cowrywise, or Shaka, which is now Rise. Nothing wrong with that. Hope that answers your question. So we'll do a final scan of the tweet feed, of our tweet feed. No one here wants to speak. You guys are all fantastic. Okay. So guys, on that note, let's call it a day. It's going to be fantastic. Every week, someone says, can you post this Naira weekly return for me weekly? Okay. So we'll post it every month. I'll post it every Monday mornings. When you wake up, you're going to see this weekly report. I'll do it on Twitter. And I'll do it weekly. Or yeah, I'll do it with the macro. So when you wake up on Monday every week, you're going to see that weekly return for the asset classes, which is going to compare stocks, bonds, money markets, crypto, and even holding dollar. I'll do it for you every Monday together with the macro. I'll do that for you guys every month. So you can start the week with information to build your portfolio, right? Yeah. What's going to happen in these markets? I'm seeing on my timelines blockade. I'm seeing blockade, so I'm seeing disruption. All I'll say, like, and I told you guys when all these things happen, don't make any sudden moves because they are fighting in a war. It will go. If you had bought when the market was down, you have made a lot of money this week. Same advice I'm going to give you. Don't make any sudden moves because they are fighting a war or they are blockading. The war cannot go on forever. So if you see a good company at a discount, buy. I told you guys I bought into UAE. I bought the UAE ETF that is going to invest in the UAE. Why? Because after the war, there's going to be massive spending in the UAE to repair all what they've destroyed. So if I'm buying into that stock, I'm buying into that stock at a discount. I looked at the map, it was down. Last time, let me look at the return now. It was down when I looked at it when I bought. So if it's down, and I know the UAE is a very, very good investment environment, why wouldn't I buy? Yep, I'm looking at it right now. So if over year to date return, that stock is down about 0.16%, right? Year to date return. Over a 5-year period, the stock is up 42%. Over a 5-year period. So look at the story. If you want to get that ETF, it's just called UAE. The UAE ETF over 5 years has been up 42%. Then if you just pick 1 month, the war has been on for 1 month. It's up 7.2. It's even recovered. 5 days is down. So why sell or why it's a very, very good ETF. It's investing in what we call a growth market, but they have a war. They're not the ones fighting, but they have a war. So yes, the price will reflect the fall of income, but the price also reflect that it's going to be massive investment. This is how I want you to think, right? When you see a world event, you want to ask yourself, hey, how will this affect my portfolio? If you see a world event, ask yourself, how will this affect my portfolio? Should I buy? Should I sell? If you know what you're doing, options are fantastic. If you buy options, they give you some tremendous upside, but don't buy them if you don't know what you're doing, right? That's how you want to invest. Ask yourself, if the market is what's going on in Nigeria right now, how can which Nigerian company can benefit from this war happening in the globe? It's Dangote. It's Dangote. Dangote is the one that is benefiting because NNPC doesn't have that much output. Hey, Mr. Ola, how you doing? You're going to be our last guy on call today.
Hello, boss. I greet you, sir.
Mm-hmm.
Good evening, sir.
How do you say? What's up? Yeah.
So I hear you. I mean, you've been amazing. You've been a great mentor. So all these ETF for all these offshore, or how do I call it? The all these companies are countries around the world. Would it be nice if you can just help us to create a link where we can access all these ETF and begin to critique and look at the opportunities around there? Thank you, sir.
So I didn't get your question.
No, so I was saying that I just heard you talking about buying ETF in Dubai, and trust me, and that's a lot of research, and you have access to a lot of this information. I was just asking if there's a way you can create a channel where we can see all these ETFs around the world. I mean, from the west to the east to the south to the north of the globe, and we begin to pick our options. Thank you.
Yeah, yes, it's possible for me to create it, but I don't trade, right? So if you have a Bamboo account or Cowrywise, just put in the ticker. The ticker is UAE to show you what I'm telling you. UAE, it'll show you. Let me see if I can share with you.
Okay, so what you're saying is, if I go to Bamboo now, if I say, for example, Australia, it will show me opportunities around Australia.
So what an ETF is like a buffet. You can say you want to buy. You want to buy all the stocks in the world. So companies create ETFs. I like Vanguard because Vanguard is very, very big and very, very cheap. So let's say I want to buy all the stocks in the world, all the good ones in the world. All Vanguard has one ETF. One, I buy what's called VT. VT. If I buy VT, I'm buying all the stocks. I'm buying Tesla, I'm buying Samsung, I'm buying Dangote if it's there. I'm buying all the stocks in the world. VT ETF, right? Right now it's about $144. So if you just Google, it's called Vanguard Total World Stock Exchange. Vanguard Total World Stock Exchange. That's all the stocks in the world. Now I'm giving you the step by step. Now, what if I don't want to buy all the stocks in the world? I want to buy only US stocks. Just US stocks. What will I buy? I'll buy VTI. VTI. VTech is going to give me only US stocks. So it's only going to give me Microsoft, Tesla, all ExxonMobil, just US stocks, right? Okay, what if I want to buy stocks, but I don't want US stocks, but I want global stocks, but no US stocks? I'll buy VTUX. So it's all the stocks, Samsung, Taiwan Semiconductor, without US stocks, VTUX. You see how it's going? If I want to buy property, VEA. If I want to buy bonds, BND. So the company creates ETFs. So if you go to say Bamboo, right, you want to buy, you can do, give me Middle East ETFs, or you can just do UAE, or you can say, give me, ask the search. Like if you do UAE, that's their ticker name for, UAE is the name that buys stocks that are exposed to Abu Dhabi, to that Abu Dhabi company, right? Abu Dhabi country. So by buying UAE, I am buying the future growth and investment in that stock. That's what I'm doing. So I'm not asking you to buy. I'm saying this is what I am doing. And the index is designed to measure the equity market in UAE. It's non-diversified. That's basically what it is. So what I'm showing you is how to invest. You invest where you see money going to. That's where you invest. If money is going towards cement, Nigeria is building roads with cement. So you invest in cement companies. That's how you invest. You chase the money. Yeah, that's what I'm saying. Makes sense?
You, boss.
All right.
Thank you. Makes sense, bro. Thank you. I appreciate it.
All right. Marzi, real quick. Marzi, what's up?
Yeah, quick one, please. So sorry. I'm currently on Bamboo and I'm looking at I exited the ticker UAE and I'm seeing iShares MSCI UAE ETF.
Yep. That's it.
That's it.
Yeah. Once you say, I'm not telling you to buy you.
I know. I'll definitely do my research.
Yeah. iShares is the company that is running that
company. Yeah.
Correct. So it writes about $19. So if you look at, look at it. If you look at the all-time chart for all-time, what's the return give me for all-time? All-time, what's it give me?
Okay. What I'm saying is 5 years. It's actually 20. Just give me 20. All-time is
5 years is 40%. 5 years, 44.83. That's what I'm saying.
Yes.
44.83. But go back and look at 6 months. Look at 6 months. What's it giving us 6 months? 1%.
Okay, this Bamboo Lab does not expand to 6 months. The max is 5 years.
All right. So if you look at 5-year return of 44. 42. Okay. Now for 6 months, it's telling you that it's only 1%. What does that tell you? This was abnormal because you can't go from 44 to 1. Something must have happened. What happened? There was a war, right? So if there's a war, you want to ask yourself, will this war, is it a black swan event or is it something affecting earnings? If UAE made black and white televisions and they went from 44 to 1, it will be a sell. Why? Because black and white televisions can no longer compete. So because they can no longer compete, their earnings in the future is going to fall. You see, so you don't buy it because it's cheap. You buy it because of future earnings. So if they're not going to make future earnings from UAE, from black and white televisions, I wouldn't buy it. But if they are making 1% from 44 because a war is going to blow up their export terminals, should I buy it? Yeah. Because if I'm patient, remember how we talked about the stock market, if you wait for a long time, the market price catches up with the intrinsic value. The intrinsic value of Dubai has not changed. It's still tourism. It's still diversification. That's the intrinsic value of Dubai. What has changed? They're no longer exporting oil. So if I buy today, so the market has said, because they're not exporting oil, we're going to price you for. So the market has crashed them to 1% return, right? So if I buy today with money that I'm not borrowing, I'm buying this stock at a discount to its earnings. You see what I'm saying?
Yes.
Yeah, because there's nothing wrong with the intrinsic value, but that intrinsic value has been destroyed by rockets. So if they build back the intrinsic value, I get exposure back to where it was. But I'm buying it at a cheap price today. Yes, I take a hit that I'm not going to make a return in the next 2 or 3 years because they're not going to pay me dividends. They want to build back their towers. So I can absorb that hit, but I've bought a good company at a good price. Does that make sense?
It does, absolutely. Thank you so much.
Hey, fantastic. I'm not telling you to buy you guys. Disclaimer.
I'm aware. I definitely do.
Don't come and hold my neck after 2 years and say.
I've been trying to make an inroad into the Dubai real estate, and this period of the war is actually a good time, but there is basically no platform. I've been trying to look for platform that will give me access into their real estate.
That's why I have to come. I have to come from my space. Next week we're going to compare the Nigerian markets. Next week I want to bring a farmer next week, but if he doesn't come, we're going to compete Nigerian markets. I want to compare it with markets in the world and markets in Africa. So I will ask yourself, should I invest in Nigeria or should I just go to Kenya? So if the farmer doesn't come, that's what we're going to do. But let me I don't know why. So please, if you're a lady, you're on YouTube, you're on Twitter, please, you are first in line. We have a bias for the gender. We want to make sure the ladies are investing. Why? Not because, let me tell you, there's a stat I saw. If you take the total number of Nigerian traders, total number of traders that have ever traded Nigeria, which means they have a CSCS account, is 6 million. 6 million. Out of 200 million, it's only 6 million. Out of that 6 million, only 10% of the CSCS are functional. So only about 600,000 of the CSCS accounts are actually being used and traded with. Out of that 600,000, less than half are women. So Nigerian women are not investing, and they should be the one investing more than men. Again, why it's surprising to me that when we had the MTN offer, there were more female investors than male investors. So the women sort of were interested in MTN. I don't know why. Maybe because MTN had electronic investing and all that, but they don't invest in Dangote, all those other stuff. Why? So even this month is the financial literacy month. If you go back to my tweet, we're doing a daily tweet. We're picking a financial topic, whether it's emergency funds or cap or credits or investing in shares. Each day we put a tweet and we've themed it for the female folks, right? Because we want you guys to be fascination. I'm going to put you back on, real quick. Fascination. I'm putting you back so you can ask your question. We want the females to understand investing. You guys have got to invest. You need it a lot more. I don't want to use that for the men. So please, if you're a female, you have a question, ask me, send me DMs. I'll answer. I'll answer. I just added fascination. I know where you went to. If you can come right back on, you can ask your question, fascination. Yeah. So now, hello, I'm new here. The first time, all the strange stuff I've never seen because I watch many online, but they never talk about buying stocks direct from stuff. Can you tell me where to buy without bamboo? You can go to your broker. Just go to any stock broker you know. Yeah. Fascination. Go to any stock. Just Google Nigerian SEC registered stockbroker. Some banks have them. Go and talk to your broker. Simple. Just go to any stockbroker and they'll help you buy shares. Hey, how you doing, Fascination? Go ahead. What's your question?
Okay, thanks very much. Good evening, everyone. Yeah, so I was trying to navigate my Bamboo app when Marco was actually saying he was seeing some stuffs on his own, but I don't know, for some reasons, I'm not seeing any of those things that he's seeing. So on my page, when I log into my Bamboo app, all I'm seeing is just the home, invest, pause, and learn, right? And then to invest, you only see the US and Nigerian stocks when you go to your home page. So I'm not sure if I'm navigating right or if it's another form of app. When you're setting all assets offering, you see US stock, NG stock, treasury bill, Naira savings, fixed return, then manage portfolio.
Okay, let me see. Let me look at mine. So I'm just looking at the Bamboo app. So when you go, you want to go to the magnifying glass, the search. You see that search?
Yes.
If you hit that magnifying glass, just put whatever stock you want to buy. All stocks have a ticker. All stocks have a ticker. So if you get the ticker name, for instance, if you put UAE, you see it pop up there. It's right there. iShares.
Okay. iShares. Okay.
Yeah. So if you want to buy UBA, all stocks have a ticker. Find the ticker. You put the name of the ticker on the search bar. It will pop it up for you. And it's the same for all. Like I just put UBA. It's giving me here United Bank for Africa for 7 Naira. So once you go to the magnifying glass, you just put the ticker. If you want to buy Microsoft, you want to buy Tesla, get the ticker name, then put it onto the search bar to pop up for you. It's the same for all of them. For the down, all of them are the same. Just put search bar, it will give it to you, right? Does that answer your question?
Sorry, one more thing. Is there like a page where I can get all ticker names of relevant investments I want to search through?
It'll be too many. So you have to search per name. So you can go to Google and tell Google, give me companies that are exposed to oil and gas that have market cap of 5 billion, that pay dividends of 5%, things like that. It will give you a summarize list. Because if you want to get everything, it's too many. That's why you want to buy through the ETFs or the mutual fund, because they sort of give you buy one mutual fund and you get everything. That's why we're doing this. So like if I want to buy energy in Nigeria, I just buy the energy ETF, or I ask the Google, what are the stocks that make up the energy ETF in Nigeria? And I just copy it and I buy. Do you understand what I'm saying? Does that make sense, ma'am?
Okay.
Yeah, it will be too many for you. So ask Google or Grok, get the name, then go to your investment app and plug the name in there and get the financials. If you want to buy a country, you can buy a country. You can buy, for instance, VTI, that's American equities. You can also buy American bonds. There's an ETF for everything. Nigeria used to have its own ETF, but it took us out a long time ago. Maybe they'll put us back in. So if you want to buy Nigeria, you could buy that MSICI Nigerian ETF, but it's no longer working right now. So there's an ETF for everything. There's an ETF if you want to buy only, you're a Christian, you want to buy only stocks that follow Christian beliefs. It's an ETF for that. You are Muslim, you want to buy only stocks in the world that only follow halal and only invest according to halal, no riba. There's an ETF for that. Maybe we're going to do a space on that one day. We'll do Islamic finance, Christian finance, and I'll show you guys Christian mutual funds, Christian stocks, in quote, Christian stocks. Like if you want to buy, if you are Muslim and you want to invest in Nigerian stock market and you want to only invest in halal approved stocks, you buy the Lotus, you go LOTUS. So if you go back to your Bamboo, let's go back to Bamboo. Let's do Lotus, right? If you put Lotus, what does it give you?
Okay, so if I put Lotus,
you go to that. You go to that search bar. You put LOTUS, LOTUS, LOT.
Yeah. So there's Lotus Hala. I've seen Lotus
precisely
selling for 188.
Good. That is the ETF in Nigeria that is Sharia compliant. So it's an ETF for everything. You just have to know which one to buy. And there's an ETF to buy Sharia compliant stocks in America, in the UK, in Indonesia, in Saudi, anywhere you want to go. But you have to get the ETD, the ticker. Then you put a ticker on your app, then you get it. So that's how you go. Do the ticker, then search, then do your research, then you tell your broker to buy for you. You don't tell a broker to buy for you without doing the research. Make sense?
Okay, yeah, makes sense. Initially, I thought it's just Nigerian stocks that is selling well for now, not the US stocks. But with what you're saying, it means different country are hosted there, regardless of if it's showing just US and NGN. Is that correct?
That is correct. Any stock at all in the world, you might find it on Bamboo. Literally, they have everything because they just have a portfolio. It's like a library. You just have a library. So all they are giving you is access to buy from your phone. That's all they're giving to you. Right?
All right.
Perfect. All right.
Yeah, thank you.
Okay. Yeah, so I've been trying to avoid Twitter. Do you have? Yes, I have Facebook. I have Instagram. I have, what else? YouTube. So if you look on all the charts, you see my handles below. So if you don't want to see me on Twitter, go to Facebook, go to Instagram, go to YouTube. You're here, you're on YouTube, so I can see you, Tux. Yeah, so I can see you, right? Do I have a newsletter? No, just on Twitter, really. And I cross-share. So if I post on Twitter, I cross-share to the other ones. How do I recover my Zenith Bank shares? No, hold up. Let me go to Lydia. Go ahead, Lydia.
Okay, hi, good evening, everybody. Please confirm you can hear me.
I can hear you.
So the question I have is pretty much a bit of my own personal dilemma. So I bought GT what's it called, GT Bank shares. I believe it was the first time it came out. So because I banked with them, and the moment it did come out, I saw like the ad, if I'll call it an ad or whatever, the notification within the application. So I bought it from the application. They just debited me to the money and said you bought shares. At that time, I had not registered with CSCS. I did not have a broker working for me. I was using the different apps, the Bamboo, the Express, and all. But because I saw this GT sale inside the GTV app, I just bought it and was like, with my bank, I'll be able to figure it out later in the future.
Mm-hmm.
So I later on, that was sometime in 2024 or 2025. But I realized now that I'm using Bamboo properly to do all my stocks and monitoring all my stocks within there. And I've also gotten some more GT shares within the Bamboo app. Mm-hmm. I've been figuring out, I've been facing the problem where I'm trying to figure out how to get either the dividends or just the first one I bought from the GT app into somewhere that I can visually see it. Mm. So I ended up signing up with this Standard Union security brokerage people somewhere in Abuja. But I've been struggling with communication with them on how to understand what I have in my CSS account, how to even use it, how to get my data from them. It's just been very stressful. So I don't even know if I still have access to those shares I initially bought, or if it's something that I'm just going to have to wait until I go to GT Bank one day and just explain to them, and then they will help me figure it out.
GT Bank has no business with your stock portfolio. Even if you buy GT shares, they don't have any business with that stock portfolio. It's going to be with the broker or the registrar.
But I didn't buy it through any broker.
Who did you buy it through?
Directly from there.
Yeah, but you have to go to registrar, not the bank, registrar. So you want to start from the GT registrar. So you take your 2 forms of ID. You go to the GT registrar, Google who they are, go there and say you want to get the total inventory of your dividends and any bonuses that you have. They will give it to you, right? Then from there, if you bought shares through a broker, you want to ask for your CSCS. So you can go to CSCS and say, I want to get my CSCS. If you have multiple, merge them. So go to the broker. If you bought an IPO, right? If you bought an IPO, or you bought through the bank, you go to registrar. If you bought through a broker, you go to the CSCS, right? So if the stockbroker is not helping you, get a better one, have one CSCS, you should get your shares in that CSCS. Okay. If it's not your CSCS, you don't own it.
Because every time I do something, I don't exactly say anything on there.
So you want to get that done. You want to go back to the broker, take your time, go there and say, okay, can I get my CSCS? Then you compare the CSCS with what the others is given to them. So if you put them to buy shares for you, when they buy the shares for you, they dump it in your CSCS. So you should see it there.
Okay. All right. Thank you.
Yep. Makes sense for you. Yeah. So go. Is that all you want to do, Lydia? You're good?
Yes.
Excellent.
I just wanted to ask about.
Fantastic. Yeah, I got a question here. So again, someone's asking about the liquidity of the UAE ETF. You guys like this UAE ETF matter? Liquidity is volume. And I said during the space, if you want to know if something is really liquid, look at the volume being traded. No, I can give you a story. When we traded in Nigeria, there was a particular guy, I won't mention the name of the stock. He would wait till the end of the trading day and then just place an order for 100 units of that share. The stock will keep on going up in price. Let me even stop talking there if I don't want to enter trouble. But you can manipulate, Jesus. You can make the price of a share go up. You can make the price of a share go up. If there's more bid than offer, the price of a share will go up. So be very careful when you see a share price going up. Ask yourself, what's the volume driving this share price up? So when you go to that UAE, look at the volume over 5 years. That tells you how liquid it is. If it's just going up in price, but there's no volume, people are not buying, are not creating, are not trading, that tells you, this might be a profit trap. That's how you want to look at it. So if you go back to your UAE thingy, you see there. No, don't look at go online. You should see benchmark returns. I can look at the returns here. Year to date is all negative. 1 month negative, 3 months negative. But last year, for the 5 years, 10%. 30% looks like a good package. So again, look at the volume being traded. That gives you an idea of how liquid the stock is. And again, look at the overall. What are you buying? What's your idea of getting exposed to this market? You want to get that market that is not correlated to the US market and it's not correlated to the Nigerian market. UAE is a tourism, real estate, the lot of banking there. That's what you're buying. So if you want to really get the volume, look at the liquidity, look at the volume. It's also traded by iShares. So iShares is a very, very large company. So iShares will not carry this stock if they couldn't get you out. Remember I told you that Nigeria was on the ETF and they kicked us out, right? Why they kick us out? Because Nigeria didn't have liquidity. When they sell, if a foreigner buys Nigerian ETF and he sells that share, he's supposed to get his money in dollars. But back then, Nigeria wasn't allowing that company to repatriate the dollars. So they took Nigeria off the index, because to allow the index, we have to be able to bring dollars in and take dollars out at will. Nigeria says, no, you can't take dollars out. But back then when we're keeping dollars tight. So they kicked us out. Because they kicked us out, we had to drop we had to drop our ETF ranking. We're no longer ranked in the emerging markets for bonds and equities. So here they are ranked. So iShares wouldn't carry them if there was no liquidity. So I think that sort of answers your question. Yeah. I've got this gentleman from Market Hub. Let me add him real quick. So does that answer your question? Really, do your own due diligence, right? But is volume, and because they're on iShares, that sort of gives you an idea that iShares will demand a certain amount of liquidity before they can trade them. Yeah, Market Hub, what's up?
Okay, quick one. Good evening.
Hey, how you doing?
Hello.
I can hear you. Go for it.
Okay. I'm using Bamboo to buy my shares. So my fear now is once the app closes or they just go off air and all that, though they are dumping my stock on my CSCS, is there another venue that I can use to retrieve it back? That's if I can access it again from that Bamboo app.
Yes. So Bamboo is just the front office, quote unquote. There's the real broker. There's a broker that's actually trading for you. There's a broker actually trading for Bamboo. So if you can find out who the broker is, you can be able to maybe go there and ask them. But Bamboo can help you put it in CSCS. So what I mean is Bamboo is not a broker, right? They have an actual stockbroking firm that they give your trades to go and execute. And that's your question. So you can actually find it from that guy if it ever came down to that. Yeah. Does that help?
Thank you.
Yeah.
Thank you.
So there's someone's asking me, how do I recover my Zenith Bank shares I bought 20 years ago with a different name to my AfriBank account bearing my current name? Go to registrars with ID. They'll take care of you. Go with ID, show proof of your name. Maybe you got married or you got a divorce or you changed your name. Go with all that proof. Go to the registrars, change your name there. Then sort of ask them, okay, how can I change it through the CSCS? If you can't do this and you have a stockbroker, just pay the stockbroker. They'll do it for you. It's like you can say, oh, hey, stockbroker, help me do this. They'll charge you, but they can do it for you. Many times I've told folks to do this and they tell their broker and they do that for you. But go to registrars with your proof of name change. They'll help you get that done. And then you can basically walk your way through. I bought stock through my broker and requested a statement. I saw it marked as pending. Does that mean CSCS hasn't recognized it yet? Well, it's pending deposit into CSCS, correct? That's just what it means, pending. So you want to make sure that it's only when it's in that CSCS that you can actually say that it's been bought. Some brokers would buy in their name and transfer to you. Some would, when you give them the order, they already have that stock. They'll just do a transfer to your CSCS. It could be any of that. But your CSS is your SI unit for what you own and what you don't own, not the broker statement. Broker statement is fine, but the CSS is the central bank to show that, yes, this has already occurred. So make sure that your broker statement and your CSS are sort of marrying, and then they are talking to you at the same time. Great questions, guys. All right, we gotta go, guys. Gotta go. Thank you so much for being here. Like I said, based next week, either we talk about the Nigerian stock market or we go into equity funds. So we have, I think I saw about 15 individual stocks in ETFs and mutual funds in Nigeria. We can take them apart, look at what's inside them, look at the returns that are inside them, and then just talk about those funds individually. So maybe we'll take Lotus, talk about the Meristem fund, talk about the Fidelity Bank fund, see what's inside them so that you can say, okay, instead of me buying individual stocks, maybe I just buy the stock. Or we look at the banking index. Who is in the banking index? What companies make up that banking index? What companies make up the industrial index? Lots of fun we can have with those numbers, right? Yeah. Nigeria has gotten frontier status. Does that change things? Well, they are looking at us. What should then happen next if we have the frontier status? They should put us back into a fund. Put us back into a fund. Before, we used to have the MSCI Nigerian index in the past. We used to have it. Then we were kicked off because we didn't have dollar liquidity. But CBN today has said that if you are an international oil company, you can repatriate your money from Nigeria 100%. So I think if the oil companies can take their money out, I see no reason why the stockbroking firms can't take their money out. If the stockbroking firms can take their money out, then there's a big chance that Nigeria can be back in the frontier market with an ETF type investment. That would really attract investments to Nigeria, because what will happen is that most of you guys are abroad in the diaspora. If you want to buy a Nigerian stock or you want to get exposure to Nigerian investment, you simply just buy that ETF. You don't have to come and buy the individual stock. You just buy that ETF. I never used to buy Nigerian stocks individually. I just buy the MSCI because they always get preferential treatment. So I would buy that ETF because it bought Dangote, it bought Access, it bought all the Nigerian stocks. It's when they stopped that I started to buy individual stocks. But then I don't have to sell. I can just sell the MSCI, get my money in dollars. So I hope it changes things, Ferno. I hope it does change things. And if that happens, whoa, the market is going to skyrocket. So maybe that's why the market is going up. If Nigeria is added to an index, the stock market is going to go to the moon, because lots of folks that are just abroad that have no business, that are not going to come to Nigeria and open up a stockbroking account, can easily buy. If they don't buy, they're going to send money down. So it's going to be good for the country if that happens. That means if you are in the market, your stocks are going to go up. The stocks are going to go up because more money is going to come, going to raise your boat and it's going to take it up. Market cap is good, but in the end, like I said, if you sit in Nigeria and you are not trading in Nigeria and foreigners are coming to Nigeria to trade, you have to ask yourself questions. Why does Nigeria have only 600,000 active stock CSCS account? Let me give you the comparison. Nigeria has got 60 million sports broking app. We have 60 million sports betting. So we have the money. Sports betting, we have 60 million. Stock broking, we have 6 million. Of this 6 million we have in stock broking, only 600,000 are active. So Nigerians have the money, but they're just not buying shares. They prefer to bet on Chelsea versus Man City. That's what they prefer to bet on. So why is it easier for a 25-year-old boy to bet on third league in Spain than to buy UBA shares? That's a big question. I wrote an article on it. Nairametrics is on Nairametrics. We've got to change things out. And the good way to change it out is that Nigeria can simply say, if you are buying shares worth less than 250,000 naira, that's $250,000, you pay absolutely no charges, no fees, no VAT, nothing, no brokerage, nothing. They should mandate the stockbroking firms to do it. We can make it easy. We can say if you buy a fund and it's below 250,000 naira, you pay absolutely nothing. It's the same computer. It's the same computer. So that would attract these boys that are buying, doing sports betting. From sports betting back to the stock market, it concerns you, because when you get older, the people that are going to pay your pension are these boys that are doing sports betting. So imagine you are now 65 years old, and then the guy that's managing your pension is doing sports betting. You don't want that. But you can't allow young kids think that the way to make money is through sports betting. We can't have 60 million sports betting accounts and 6 million stockbroking accounts. Not going to work. So we have to do certain things to change it out. Sports betting firms don't charge you money when you buy. You only pay money when you win. Abi, do the same thing. If you have less than 50,000 naira, don't pay any fees. And we have to talk more about the success of the stock market. I mean, people are saying, oh, I did this, I did tickets, I won 25 million in sports betting. People are also making money in stock market. All the rich guys in Nigeria, all of them are in the stock market. Dangote, Otedola, Tonelumelu, Rabiu, they are all in the stock market. All. So we have to emphasize those good stories, and that's how we're going to win. We can't let our kids go into sports betting. That's it. Thanks so much, guys. I will see you guys definitely here next week. We're always here 7 p.m. We're talking about finance, the economy, and of course, investing. I hope you guys will be here with me again. My name is Kalu Aja. I do have a book. Let's talk about your money. It's on Amazon. That's how you can support me. Buy Amazon or like and share my social media feeds. That's how you support me. I have a lot of young people that work with me to produce all this stuff you see here today. I support them that's how they get trained. So if you support me, you support them, you're helping their country. Yeah. So do like, follow, and share our feeds. Get the book. That's basically what we do. Everything here is for your digestion, but do help us out. We will appreciate it. Thanks, folks. Have a good day and bye.